Hello, curvies, and welcome to Larger Curves today. Make sure you smash that like button, smash the subscribe button, ring the bell so you can get notified next time I upload a video, and so you can become part of this beautiful curvy community. Also, share this video. People need to know what we're talking about today. They need to know, okay? It's very important. Oh, look at my friend Sarah Bay from Paris. Of course, you're here. I love you. Bonjour. Thank you for coming in and coming through. Thank you so much. Welcome to the best live of the day. That's right. That's right. We are about to have the best live of the day because it's about your life. That's right. It's about your life. It's about your legacy. And it's about making sure that the things you love are protected. Come on. We're going to get into it today. We're going to talk about life insurance. We're going to talk about things you can do to edify your current policies. And we're going to talk about a lot of different things. So let's get at these comments. I appreciate Sarah. Hello. Yes, we smashed it. We love. Oh, thank you, Sarah. Let me tell my mom I'm on because she should be here. Where's my mommy? Yes, check out the website that I have. I have all kind of shirts. I have cups. I have mugs. I have everything. And this QR code right here, if you use this QR code, you'll be able to book an appointment with my colleagues and I so that we can get you. Oh, you are on. Thank you, Mom. So that we can get you guys scheduled for anything. We can review your policy. We can just talk to you. We can do a financial review. We can sign you up for the business. We can do all kinds of things. Okay. Yes. Follow me on Instagram, Larger Curves with 2 S's. Twitter is Larger Curves. TikTok is Larger Curves. And Facebook is Larger Dash Curves. Okay. Right on. Thank you guys for being here. Well, let's just start. This is a first for me, so I have a flow, of course. I have a flow. However, I'm also willing to be flexible and wing it. I don't know. I kind of feel like my stream keeps pausing on my end. Is it pausing on your end? Let me see. Let's see. It's not pausing on my little screen, is it? I don't know. Yes. I'm just checking my lag. I feel laggy. Is it lagging to you guys? Yeah. Look at that. Look at that lag. My bars are all here. I have no idea what I could possibly do to decrease my lag time. Anyway, bear with me. We're going to go through some awesome information. Now, this first reel that I was going to play is just to go over the different types of life insurance there are. There are many types. There are hybrids. There is the old kind. There's short term. There's individual. There's group. And as you know, there's insurance for stuff. I'm sure that whatever you're looking at me on right now is probably insured. If it's on your phone, it's insured. And if it's on your TV, it's insured. And, we get our phones insured, our houses insured, our cars insured. But what about us? What about us? What about us? We need to be insured. Just last night, my good friend Mims was on his YouTube channel doing a fundraiser for a mother of 3 who died. And they needed to do a fundraiser. To me, that signals that person didn't have everything lined up. They didn't have their life insurance. They didn't have their asset protection. They didn't have a trust. It's a fundraiser. A GoFundMe is not life insurance. It will not provide for your family the same way that had you had the foresight to do a little extra in the front, they would be taken care of in the end. Now, working hard every day, Kudos. Having a job, kudos. You're doing the best you can, right? However, that's not enough, you guys. You guys go to work for 40 hours a week, but you don't have any protections in place to make sure that you guys don't need a GoFundMe or a fundraiser for the loved ones that you're working so hard for. Make it make sense. We need to make that make sense. How we work for 40 hours a week, but then we don't have any protection for any of the things that we're working so hard to provide for. Can you hear me okay? Can you hear me okay? Right on, mademoiselle. Thanks for being here. Yeah, it was lagging last night too. I don't know. Maybe I need some more memory freed up in my device or something. I'm not real sure. You know what? I can actually try to see if I could switch devices and come on my MacBook instead. Let's try that. I'm going to take a minute because this is a marathon, y'all. We got a lot of talking to do. So if you need to go make a run to Costco, get a sample and come back, most likely I'll still be here because this is my first annual life insurance drive virtual marathon. And I'm old enough that I grew up with Jerry Springer. Jerry Springer and Jerry Lewis. Yes. Remember Jerry Lewis used to have those telethons? Yes. And they would just be all weekend and they'd have people in the back on the phones to take your pledge. Remember? So I had the idea. I was like, why aren't we doing this for life insurance? Why aren't we having a drive to get awareness up about the necessity of life insurance, asset protection, and having a will at least? I mean, if you don't feel like doing a trust, at least do a will. We saw that Twitch, rest in peace, passed this year since the last Life Insurance Awareness Month. He passed on. He didn't have a will, you guys. His wife had to wait for probate. They had kids. She had to wait. Now, Twitch loved his family. He worked hard every day at Ellen, but he didn't even have a freaking will to make sure that his assets didn't have to be held up by the court of probate. And his wife and their kids, they had to struggle during that time because his income was gone, he was gone, and then all of his assets were tied up in probate. We need to make it make sense. Insurance on our cars is mandatory in most states for a reason. You need to be your own state, your own government, and insure yourself for your own reasons. It's not it's not a hustle. When you guys get the right policies and you structure them correctly, it's not a hustle. But then there are people that are like, oh my God, I paid for 30 years and it never paid out because you probably had a term policy that ended after 30 years and you outlived your policy. So now you pay 30 years worth of premiums for nothing. I do not subscribe to term insurance usually because it's really not worth it in the end. You want something that's going to be permanent because you expect to live a long time, right? Yes, they had a $50,000 policy on their mother. They said they would starve in order to pay that policy. Yes, because the cost of a funeral in California right now is between $10,000 and $20,000 easy. Unless you know somebody who knows somebody who knows somebody. And even if you already did that funeral plot purchase thing, there are still additional costs. Even if somebody bought the plot at the cemetery and they bought the headstone at the cemetery already, trying to save you, they're still open, they're still closed. There's still a lot of costs involved. So definitely have at least a burial policy on yourself. A $50,000 policy. If they were going to starve in order to pay it, that's probably a permanent type of policy. So they know the benefit of keeping it paid no matter what, because it's definitely going to be paying out that $50,000 in a tax-free lump sum payment to that grandmother's beneficiaries, which are probably the people that are paying it, which you can do too. Awesome. We hear you. Okay. I'm getting this other StreamYard up on my other device so that, where'd it go? So that I can see if I can stop lagging, because it might just be this Dell. So we're going to see if the Mac is a little better. Okay. So of the people in the chat, again, thanks for coming through. Who in the chat is willing to share whether or not you have insurance? Can I get a 2 in the chat if you have insurance? And a 0 in the chat if you have none. Any type of insurance, whether it's through your job, which is known as group insurance, and is a form of term insurance, because once your job is over and terminates, that policy is not going to cover you or pay out anymore. So for all the people who are like, oh, I have a policy through my job. I've been at the job for 10 years and I have a policy through my job. Well, a lot of things are changing these days. And if that job goes away, you don't have your policy. And now you're 10 years older. That means that premium is going to be 10 years high, 10 years worth of increments higher. You might have a health condition, right? You might have had a lab report that came back and said that you were diabetic. You might have had something come back, and thank you, CD. Yes. You might have had something come back that changes your insurability. Insurability means your ability to be insured. There are some components that we're going to go over today about what makes you insurable. The number 1 component is your age. The number 2 component is your health. That's why it's so important to get insurance while you're young and healthy. That means your premiums are going to be very, very low based off of those 2 factors. When you get older, it's still going to be based off of your age and your health. What are the chances of years going by and you being older? Pretty high. So that means that's already going to be higher. What are the chances of some type of health, something coming up the longer you've been on the earth? Very high, right? So what's going to happen to that premium that would have otherwise been affordable? Now that a premium is going to be astronomical, because not only are you behind and need more coverage, but you're older. And now you have to pay all that. Okay. So we're getting this logging in over here. Let's see. Check out these comments. I hope you guys are having fun. CD has her insurance. Yes. And I'm so excited. Your job, yep, before it goes away. Oh, but yes, she said, Sarah is saying you can get the money of that policy before you get away. Some jobs may allow you to retain your insurance, like through Cobra, like the health insurance thing where you can decide to pay now for that insurance that you got through your job, and now you can go ahead and take it on. Remember they used to have this Cobra clause? I believe that some companies will allow you to do that with your life insurance also. But if anybody checked those Cobra prices, yeah, those Cobra prices are astronomical, you guys. As soon as you don't have the group to pay their portion, your portion by yourself is still going to be pretty high, pretty high. Life insurance is just good because that is how many other groups are able to pass down their generational wealth. This is why I got into life insurance, because being a Black woman here in these United States, we know about the disparagement of the wealth gap, right? We know that basically some people had a 400-year head start. We know that. And that we're behind. And that part of the wealth that was transferred is, in fact, it's an empirical fact that it's through generational wealth. Generational wealth created from life insurances that are attached to family banks. And Rockefeller ring a bell? Does the Rockefellers ring a bell? Yes, that's a multi-generational family trust where every time somebody passes, the life insurance policy gets paid to the trust, and then everybody lives off the trust. Hello? And it's a family bank, and they're able to borrow money from the bank on a tax-free basis because it's protected by the tax code of insurance, of life insurance. So it's all tax-free. And that's how people are able to generate and maintain gobs of wealth. And I wanted to spread that around. Financial education and financial literacy is a new crusade of mine, people. Let's go. So your offspring can use it to put money down on a house, start a business. Yes, Mademoiselle is very well educated in this. You can use your life insurance money for so many things. For so many things. Let me see. I use another account. Here, just a second. I'm getting a code so I can switch computers and see if it's not going to lag over here. Yes, it's me. Thanks again for being here. Try to share this video with anybody you think might need to have this conversation. Okay? So you go to the gym to have good health. Yes, good health is better for you. Yes. Yes. Do you have life insurance? Gives a bonus if your health is good. Yes, that's true. There's different ratings. You can get preferred premier, you can get premier, you can get preferred, you can get standard, and you can get substandard. If you're substandard, you're getting rated. That means you're having some issues. If you're preferred, that means you're in top-notch health, and your premium will reflect that. Yes, there is an incentive for being super healthy. There is. Yep, it's your money, and you get the cash before. I think it's more to get the money of that group contact and broke the life insurance. Yes, I'm not exactly sure. I think it's more to get the money. Yeah. How much do you need to invest in a policy in order to start borrowing? I took a course, but they said term insurance was better. But for me, it makes sense to get whole if I can borrow against it. Okay, so you're very right. Let's bring this reel up. Let me start it over. And I'm going to add it. See if it'll let it play. This might be what's glitching me out, you guys. Trying to have this media on here. Oh, do I have to? You guys can't see that. Oh, we can't see that. Oh, it's letting me in this other studio. Right on. Just a second. Hi. Okay. Okay, it looks like it might be working. I'm gonna enter the studio. Let me mute this one. I think I need to mute this one. And then we need to do this. We need to do this. Okay. Now we're gonna switch out. Okay. Wait, where am I? Wait, I didn't add me to the stream. Okay, I got my other device up, but now my head is so huge, you guys. Oh my gosh. Can you hear me still? Can you hear me? Well, this is my head. Okay, can you guys hear me okay? I can hear me, I think. So now I'm going to stop this camera so I know which one we're on. Perfect. Okay. So now let's see if I can present. Is it on this computer? Oh, shit. Cancel. Video file. Oh, I'm getting snazzy, you guys. Okay, I hope this plays now. Oh, we're right here. Okay. So how much life insurance do you need to do before you can start borrowing? Okay. Now, the thing with that is this is a very good point. There are two types of life insurance, and we're going to get them right here. Looking for my little picture. Okay, there are two types of life insurance. There's whole life insurance and there's term life insurance. Term life insurance, you guys, if you go online right now, that's the one that's pushed, but that's not the one that lasts your whole life, and the premium doesn't stay the same. People who, Primerica specifically, they love telling you to get freaking term insurance. Term simply means that the term is going to change. Term means that the terms are going to change. There. Term means that the terms are going to change, or period. There's no or. The terms are going to change. It's either going to terminate term, or the terms are going to change, meaning the premium is going to go up, right? Or that you need to change it or something. It's not permanent, and it does not grow cash value. Only permanent insurance. Yes. Yup. Primerica, they love telling people to go get term insurance. And it sounds great. They're like, oh, go get term insurance and invest the rest of your money over here, here, and here. Well, there's a way to use whole life insurance and invest your money at the same time in the same product. Okay. And they could sell it to you. Those same agents can sell these same things that I'm focusing on, which is the IUL, the Indexed Universal Life Insurance products, are permanent life insurance products where your premium doesn't change, where you grow cash access that you can benefit from while you're living, and then your beneficiaries will still get something after you pass on, if that's how you decided to structure it. Yep, Primerica. I I had an 80-year-old client. She's like, "Oh, my husband had my insurance taken care of, and but it didn't lapse. She lived past her policy. So now she's 80 years old and her policy when expired when she was like 78. You can't even get insurance after 80. They're not trying to insure you. They won't even insure you, right? Even if you could pay, you'd have to definitely get another product. But you guys, like I said, you can use this QR code right here and you'll be able to have your free financial review. We'll complimentary go over your policies and all that stuff. Ooh, look, I got off this computer right in the nick of time. This one is tripping. Let's go here. Let's X that. Close all the tabs. I'm going to do this like this. I'm trying to get this other screen up for you guys. I had a little something for you, but now that we changed devices, you're going to have to bear with me. Okay. Let's see. I really want to show you. Yeah. I was like, oh, and then me and a Primerica agent got into it. So I'm selling whole life insurance. And I've even evolved from the type of life insurance products I had been selling prior, only because the ones that I'm currently selling are, marketing, because I'm actually marketing. The ones that I currently market are $1 million policies. The ones I had access to before were only going to get my people up to maybe they could possibly eventually grow $300,000 cash. The policies I am marketing right now are $1 million policies. I have $1 million baby policies, $1 million human policies. I currently, on my own children, we have $1 million baby policies where by the time they're in their 40s, we've structured them in a way that my children will be able to have access to $1 million cash in their 40s just from these insurance products where the premiums based off of their age while they're juveniles. Hello? Isn't that fascinating? Isn't that fascinating? And I had a friend reach out to me on Instagram. She's like, oh, I had insurance, but I had to let it go. And that's such a relatable story. I bet of the people in the chat, some of you probably had insurance before and hit hard times. And that's like the first thing you let go because you think, oh, I'll be alive. I can get it again later. But I bet you kept your phone insured. So you think more about your phone than you do about you? Are your kids going to be able to eat with that phone? Is your house note going to be able to get paid with that phone after you're gone? You insured it. What's it going to help? Is it going to put food on the table for your family after you're gone? Is it going to make sure they have a roof over their heads after you're gone if you're the primary breadwinner? What are these things that it's going to do for you on these inanimate objects that we decide to get insured? We drive around in $60,000 cars. The amount of insurance you're probably paying on your $60,000 car could be a fantastic investment into your IUL type insurance policy. But because it's not required by law, you're not thinking about that. I need you to think about that, especially during Life Insurance Awareness Month. And that's what this life insurance drive is for, is so that we can bring awareness to the reasons that you need this insurance, okay? I'm going to share this stream. My colleagues will be joining me later. I have several colleagues coming, As I mentioned, I am a licensed professional, licensed in multiple states, and my colleagues are also. So if you have any questions, then I'll be able to help you. Okay, so I'm copying that, and I'm gonna. Okay, so I'm gonna send this to her. Term versus life. Here's my slide for that. Yes, here we go. Term versus life. Oh, mademoiselle. How many months do you have to pay to borrow? Okay, so faithfully paid for 5 years. Yeah, on the policies that I create, when we structure these policies, depending on what your goal is. So if your goal was to um, front load a policy so that you can get to the cash sooner, you can do that. Typically, on life insurance policies, through like the past people I was marketing through, traditional life insurance policies, there's at least a 3-year seasoning waiting period before any cash value is accumulated. But like I said, I've evolved. I've evolved into the new type of the hybrid policies where you can get around that 3-year seasoning period because you structured it in a way where you pay into it a lot sooner so that you can access the cash sooner, right? But typically, on average, it is about a 3-year seasoning period. On the $1 million baby plan that I was writing for another relative, we made it a 2-year waiting period before they could start accessing the cash. But the premiums were allowing for cash to start growing sooner. So it's all about structure, but it's only available within your permanent whole life insurance policies. Definitely available within 5 years. Definitely. Okay. And that's even on a tiny policy. Even if you're only paying $25 a month, then you should be able to have some cash buildup within 3 years on that policy. If you don't, it's the wrong policy. It should not take more than 3 years for surely. Okay. Yeah, I invited Corey for sure. Everybody, hopefully, Corey is one of my business partners. And so she's out there on the East Coast in Maryland, and she will be able to help you guys in Maryland. I'm also licensed in Maryland, but Corey is definitely invited. I left her a message, and she's always welcome here. I think the whole life insurance is better than the savings account. Yes, because you can borrow against it tax-free. Thank you. Mademoiselle, you should be up here with me, girl. You should be up here with me. These are all my talking points. Yes, whole life insurance is better than a bank account because plus look at what's happening with the banks right now, right? So we just had those couple of banks at the beginning of the year that all things got froze, and now we have BRICS taking the dollars, and that might make something else happen. But you can have your own bank. You can control your whole own assets. And that's what these types of policies are. They are the types of policies where I have clients that they literally put a little of their money over in their Chase account. So if they get paid $5,000 a month, they're putting $4,000 a month into their IUL type accounts because they're going to be growing their money immediately with on average of about 12% returns. Now, if they would have put that $4,000 a month into their Chase, into their Bank of America, into their Wells Fargo, into their Patelco, into their Navy Credit Federal Union, even with those great returns on their accounts, you're not getting more than 0.00 something. At a credit union, you might get 1% a month return on your growth to grow your money. In an IUL, it's indexed. That means it's guaranteed growth at whatever percent you illustrated at, which what I illustrated about 6%, but on average it's a good 12% at least. That's the return. So I promise low and deliver high so that you and I are both excellently happy. And yes, you can borrow against it tax free, though, is the point. So the thing with that is you have to look at what your goals are, right? So if your goal is to grow the money that you work hard for every day, because working isn't enough, you guys. Working hard, they tell us work hard and save your money. But if you work hard and save your money in these traditional accounts, you're going to get traditional results. You will get traditional results. 0.001 on a savings account at Chase. Pennies on your dollar. Pennies. Pennies. You work hard with your blood, sweat, and tears, and they're telling you, oh, just work hard, save it, put it in the bank, let it grow, and you're getting nothing. Even CDs are only giving you as much as a life insurance policy after 3 years. CDs are what, 4% about? Bonds, maybe 5%. I'm talking about accounts where it's on average starting at 6, maxing out. There's one account that we have access to that just last year the return was 44%. 44%. Bank of America's not doing that. Wells Fargo definitely not going to give you 44%. It's not going to happen. Then try to go to Wells Fargo for a loan. Try to go to the Bank of America for a loan. When times get rough, you've been a customer for 38 years, try to go over there and get a loan. Tell me what hoops of fire you need to jump through. What application process you need to go through, right? This way, your insurance, you don't have to fill out a loan application. You don't have to go through no rings of fire to get approved. You don't have to face racial bias. You don't have to face anything. You don't have to wait hardly either. Most cases on the types of products that I'm marketing about, you can call them and say, I need $1 million. And they'll have it for you within 48 hours. You guys, these accounts are life-changing, and there's time to get in, but I agree with Mademoiselle. Oh, look, I thought this was my touch screen. I forgot I changed screen. Yes, and that's what my crusade is, to get as many 20-year-olds insured as possible, to get as many 30-year-olds insured as possible, to get as many humans insured as possible, period. However, like I'm stressing, the younger, the better. The younger, the better, you guys. Because when you're 20s, you're driven, you're going to work, you're finding things out, you're healthy, you're young, you're vibrant. Did you guys know that you could have taken your tax return money and prepaid your life insurance policy for the year so that you don't have that bill to worry about? I always suggest that to my clients, especially my young clients, because I know, we're a little flighty. You might have this job this year, but want to do something different next year. While you're working, use the benefits of while you're working and pay off your premiums in advance. And then that's one less bill you have to worry about till next tax return. And then should anything happen during that year where you get let go or decide to move on or something, at least your life is covered, right? Isn't that an excellent idea? I always tell my people about that because people don't really think about that. They think, oh, tax refund. Let me go to Disneyland. After you pay yourself by covering your life for that year, after you ensure that your loved ones will have the benefit of what you set up for them. Then what you have left, go ahead and use this discretionary income, but definitely make sure that you're attempting to cover you first, right? You totally would have been sitting pretty by 47. Oh my God. I'll show you some illustrations about um, what it can look like um, if you would have paid X number of dollars into an account when you were 20. And by the time you're 47, how much money you could have had access to. We can go through that later. Ooh, I love Mademoiselle. Thank you. Annuities. Okay, so annuities to me is a reach around from an IUL. So let's say you are a little older and you missed your perfect window to have life insurance. As a licensed life insurance agent, I have a license that I can sell you these annuities right here. Life insurance is dependent on your age and health. Okay. Annuities is dependent on your finances and can garner the same types of benefits that IULs can. Okay. So you attended, yes, he liked annuities. And like I said, annuities are great. Annuities are ways for you to, I suggest strongly, anybody who's in the chat, checking on your 401k. If you have a 401k, understand that 401k is simply a tax code. That's all it is. It's a tax code. And the tax code allows for the employer to have a complete tax write-off for the amount they match your savings to, while you will get a tax deferred benefit later on, right? But when you get that tax deferred benefit, you'll be paying taxes on the entire amount of contributions, including the ones from your employer. When you think about it, does that sound super duper fair? Like they get a full benefit of tax benefit that year, but you're going to get the benefit of it being deferred for the part your employer gave you, plus the part that you paid into later, when your tax bracket is probably higher because your dependents have grown up and left the house, right? So to me, I feel like you should probably look into a fixed indexed annuity. You can roll over your 401k to a fixed indexed annuity. Most cases, they'll give you some type of huge signing bonus, $13,000, $35,000 in some cases, to add to your pot. And then that fixed indexed annuity will grow above other growth possibilities. And it's indexed. That means your growth is guaranteed and locked in. And that's why people like fixed indexed annuities. 401ks, there's fees, there's taxes. I keep telling the story. My good friend had to go get some money out of her 401k. She only asked for $2,000. This is this year, 2023. Asked for $2,000. They only gave her 14 because of taxes and fees. Is that a good payoff? I don't think so. There are fees in an indexed annuity, but there's not those types of fees that would have ate up $600 from a $2,000 request. That's not going to happen. Okay. Make sure you're structuring these things correctly, right? Let's look. I'm going to show you real quick. I still was looking for the term versus life. That's what I have up right now. Let's see. Here's a good illustration. Okay. Let's make this big. Hmm. Okay. Just a second. Graphics. Oh, is it showing up? Okay. So then can I say here, I'm going to remove that. Got to press it harder. And then I'm going to go in this StreamYard and I'm going to share my screen. See if it'll let me. Oh, here it is. Is that coming up? Bam. Okay. So let's go back up real quick and then I'll come back to your annuities. So term insurance is temporary insurance policy with an expiration date. Okay. It protects your family from loss of income. It's a good idea until you've raised kids and paid off the mortgage. It has lower payments at the start. The premiums increase with each renewal period. So if you get a 5-year term policy, great, 5 years worth of premiums at age 20 is $25, let's say, and now you're 25 the next time, and now the premiums are going to be, let's say, $75. And then you engage in that contract for a term. Let's say you decide on a 20-year term now, and now you're 45 and that term expires. And should you decide to get another term, it's going to be based off of now you being 45 years old, which will probably be around maybe $200 a month. Let's see, now you're engaged in that term, and now you're thinking, oh, I'm going to get this term until I'm 30. But the longer the term, the higher the premium. So now you just went up to $300, and it only is going to last till you're 75. And then at 75, you go to your insurance agent and you're like, hey, I want to increase my term. And they give you a number that's $673. Hello? But now you're 75. Are you going to have that much money discretionary when you're 75? I don't think so. You might. I'm not wishing nothing on you. But there's no cash value in the term policy. But the benefits transfer to beneficiaries tax-free. So that's excellent. So it's still insurance. So your beneficiaries will still get the tax-free benefit. But so far, two things stand out to me. No cash value and something's going to increase or terminate. Oh, that's three things. Something's going to increase, something's going to terminate. Those three things alone make term policies worth looking really hard at, in my opinion. Do your own research. It might last you for some time. You might want to do something where you can have as many life insurance policies as you want also. So let's say you want to have a term policy for $500,000 in addition to your $1 million permanent life insurance policy, right? You could do that. Let's say you want to keep your term policy through your group at your employer, and additionally, you make sure you have your whole permanent life insurance outside of your employer. You can do that. This is your life. You can do it however you need to do it. Structure it your own way, but make sure you're using strategies that are going to get you to your long-term goals and create the generational wealth and legacy that you're looking to provide for your family and lifestyle. Okay? Now let's take a look at the whole. This is going to be the side on the blue. Can you see that okay? Whole life insurance is long-term coverage for as long as you pay the premiums. Okay? So as long as you pay, it'll play. As long as you pay, you're covered. Now your whole life does sound like a whole long time, right? But that's the benefit. There are hybrid policies that I'm talking about, though, where you can front pay everything. You can front load them. That's what we call it. You can front pay. So if you don't feel like paying your whole life, you won't have to, but your whole life policy will still be intact because you paid the whole thing. You see that? Also, it ensures your burial costs and other funeral expenses are covered. It costs a little more, but has flexible payment arrangements. So we already said that you're covered as long as you pay your premiums. However, a lot of people don't engage the flexible payment arrangements that many insurance carriers offer. So I mentioned my friend was like, oh, I had to let it go because I hit hard times and I decided I couldn't afford it, right? Had she engaged her waiver of premium writer, or had she had cash value built up, that could have paid the premium until she got back on her feet. Calling your insurance provider and seeing what your options are is always what you should do. A lot of people, though, they just get so stressed out and so, overwhelmed that they do a form of white knuckling. They're just like, oh no, what do I do? And instead of reach out and seek help and find out about flexible payment arrangements they might be able to engage. Sometimes they'll let you miss one payment. Sometimes they'll let you miss 3 payments as long as you hurry up and pay over here by month 4. As long as you pay month 4, that's 3 months for you to get back on your feet, you guys, and keep this going. But you have to reach out and talk to the person and also select the proper type of insurance where if this type of situation happens, you're still covered and your loved ones are still going to be able to benefit from your foresight to have these things taken care of. Let's keep on going down the list on whole life insurance. During our life insurance drive and virtual marathon, thanks again for being here. Smash those buttons, ring the bell, okay? Make sure you're sharing the video. We want to get the word out. We don't want people to have to have fundraisers and GoFundMe's and all of that stuff, right? We don't want people to have to do that. Let's see. The premiums don't rise as long as they're paid. Your premiums will be level premiums unless you structure your IUL. Let's say you just started a job and you're like, ooh, I want to get this IUL because I'm young and healthy now, but I only have $500 that I can save in it right now. But I do know that the business I'm in, I have a bonus due by year 2. And so starting year 2, I want to be able to put in $1,500 a month. You can structure things to do that so that it's your choice to increase your payment based off of what your goals are. Okay? If you have any questions, just put them in the chat. I'll get to them. Thanks for following along. And let's see, the last thing on the whole life side is the same as term, where the benefits transfer tax-free. Okay? That's how you get to that generational wealth transfer. Okay? Because everything else is going to get taxed. But life insurance is a tax-free opportunity to pass on up potentially millions of dollars to your heirs and estate. Tax-free. Isn't that fascinating? So now I'm going to show you let's stop sharing that. Go back. I thought I was doing this. Okay. Now I'm going to show you the annuity. That was a great question. So an annuity is a contract still between you and an insurance company. So that's why I'm licensed to be able to sell it. And you would make payments, and you can have, there are different types of annuities where you can do annuities over time. You can do a single pay annuity. Let's say you came into a large lump sum of money and you're like, oh, let's put this aside so that I can create a retirement plan for myself, you know? And that would engage your annuity to be able to pay you out. Okay. Let's see. So it's an investment. It's a series of payments made in equal intervals. And they're, oh, I didn't know that a home mortgage payment is a type of annuity. Wow, I didn't know that. So it's to guarantee you a source of income during retirement. So remember a couple of months ago, Yellow Freight Truck Line went out of business, went bankrupt. Those truck drivers who have been driving trucks for Yellow Freight for decades showed up to chains on the yard and then ended up with an email talking about, oh yeah, your pension, it's gone. Worked their life. They worked their life to pay and paid into that, you guys. And that company went bankrupt and took their retirement with them. Those people are scrambling. They're older now, they're overworked now. What is on the horizon for them? Who knows? The competition is tight for young people. Imagine what the competition is for now these unemployed people who have been gainfully employed for decades at one place, lost everything overnight. A fixed indexed annuity is your personal retirement plan, you guys. Because as long as once you pay into it, the annuities work by converting your premium payments into regular payments that can be a source of retirement during your golden years. And you can decide when that retirement is. Maybe you decided that your golden year is when you're 43. You decide, I'm not doing what my mom and dad did. I'm not gonna be chained to this desk forever. I'm gonna get my work in now. And by the time I'm 43, I want to start receiving $5,000, $10,000, $15,000, whatever the number is that you decided to come up with. And I have a way for you to get to that number too. It's called your dime, your financial IQ number, your FIN number, your financial independence number. That's a number we can help you come up with to see how much money do you think you're going to want to live off of when you're 60? Is it $10,000? Is that going to be enough for you to live off of while you're 60? Okay. Or while you're 43, like I was just using the example. How much money do you need to invest now into this savings vehicle in order for you to have access to $10,000 a month when you're 43? We can structure it like that. Poof, come up with the number. You can get it paid in those regular intervals, or you can lump sum pay it with the bonus that you got from work, and have yourself set up to receive that $10,000 from your personal pension fund, your personal retirement fund that you set up through your fixed indexed annuity. Isn't that exciting? Like, this gets me all kind of crazy. Okay. It's super exciting for me, and I hope it is for you. Let's see. What do you think about annuities? Okay. Yeah. Zara is here. Hey, did you get your channel up yet, Zara? My professor at school said he was selling a house, put the money into annuities. He wanted, yep, exactly. That's what I was just saying. You can set up that to do that, you guys. Most people are like, oh, let me go buy a car. No. After you take a bulk of that money and set your retirement up, that's what you do. Okay. Then go buy that car. Okay. After you pay off all your credit card debt, then go buy that car. Okay. If you want to set up your personal retirement, you can do that through a fixed annuity. Yes, you can. And like I said, it's not attached to your health. So if you had some type of health disparagement that stopped you from qualifying or made you uninsurable, like I mentioned, if it made you uninsurable for traditional life insurance, like an IUL or a whole life policy, or some other type of permanent life insurance policy that's going to grow cash value, you could also, the alternative is a fixed indexed annuity, okay? Which is also tied to a life insurance product. Great point out. I'm just tuning in. This is my Liam Life Insurance Awareness Month Life Insurance Drive Virtual Marathon. Yes, because financial education is my stick, and I love the idea of financial empowerment, financial independence, breaking free from the chains that bind us to the 9-to-5 W-2. Yes, let's get free. Let's get financially free. Let's free up this mindset of working and saving the traditional little way. Eek and eek and eek and eek and eek. Let's get to it, you guys. Deserve it. We deserve it. And we're going to be discussing the ways to get to it today. Thanks. That's a great question. Yes, the importance of having whole life insurance. Where's the best place to sit my money? That's what we're talking about. So this, we're talking about life insurance because specifically under life insurance, you're allowed tax advantages and growth advantages and access advantages that you don't get in other types of products, okay? So it would depend on your situation, and you can use this QR code right here to see the different things that we offer with the group that I'm with. It'll take you straight to our landing page to get you booked to an appointment, where we can do a financial review to see what your goals should be. We could get you a policy review where we can go over any existing policies you have and show you what to expect. We can go over your financial IQ number. We can get you your financial independence number. We can get you your dime number. What's a dime? That's excellent. Debt, income, mortgage, and education. Those are the four majors, right? You take these numbers, you do some multipliers, and you'll come up with a number of how much you're going to need in order to satisfy all these things being paid off. And then we look for products to complement that number most affordably for you. So be sure you use this QR code here in the corner to get those things scheduled, okay? And that takes you right to our Calendly, and you'll be able to, from this QR code, you'll be able to go ahead and set up an appointment for you straight from there. Now, I'm going to let this reel right here play. I'm going to add this to the stage. It's going to play though. Where'd it go? Is this the one I added? So remove that one, add this one. Is it going to show? Huh. Okay, let's remove this one. Why do I have so many things back here? Let's go here. Let's go here. Nope. Let's say present. Let's say video file. I'm going to show you guys this real quick. You take a look at it. And I'll be right back to our regularly scheduled program and grab some water. Right on. So these are just some facts that I think need to be brought up. There's highlights. Let me see what this comment is over here. Turn this down. Now that I'm back. Yeah, so Zara, if you're young and healthy, I would say go ahead, grab an IUL depending on your financial situation. Grab an IUL, front load it, and guarantee that you'll have what you're looking for at a certain age. If you have a 401k, a lot of people in the tech industry, Google, Facebook, Twitter, whatever, they had great 401ks. So they have a lot of money stacked that they'll get taxed on later when they're older and have less dependents or whatever. And they'll be able to roll it over to a fixed indexed annuity. And here, we're going to go over the benefits of that. I have right here, where'd it go? Benefits of rolling over. So basically, Zara, the answer to your question is, what are your goals? Can you play with me for a second, Zara, and tell me what your goals would be? Let's hey Milo. Milo's right here. He loves me. Okay. What would your goal be? Okay. So when you say what is the best place to sit your money, is it to grow it? Or the best place to sit your money to have access? Or is it the best place to sit your money to create a retirement pension for yourself? Or is it the best place to sit your money to have a family bank so you can use it as collateral against huge purchases? Or so there's different things. So if you tell me any of your goals, just name one goal you have, and I'll suggest a product that could complement the goal. Okay. Part of what I do is I help people's dreams come true and help make their lives better, because if your dream is to be able to retire by the time you're 50 and travel the world, I can help you structure things to get to that goal sooner. Okay. So, oh, look, for me, my life is so unpredictable. I'm scared I won't have the money to pay it monthly. That's a big concern, like I said, for a lot of people, but you have to get in somewhere. I would no better time to start, even if it's only a little bit right now. If it's unpredictable, why is it unpredictable? Because also part of what we do is so business partners. I'm in financial services. This is the premier place to make lots of money. You can make lots of money helping people's families. You can make lots of money helping people get their financial house in order. This is the number one industry to make money. and you're very well versed already, mademoiselle. You could potentially be an agent and help other people get their lives structured. And then when you get paid, you would be able to pay your stuff. And it's a big, gigantic, awesome centrifugal force going on where you helped a family, and you helping that family helped you be able to get to your dreams and goals too. That's how I structured my stuff. That's everything I'm structuring right now is structured that way. Like my business is part of my plan to help the unpredictability, and it's still unpredictable, and it's manageable that way also. Right? Let's see. Yeah, that's a big concern. But like I said, we are paying insurance on our cars. We are paying insurance on our phones. We make that happen. We make happen what we decide to make happen, even in the most unpredictable times. We make happen what we decide to make happen. Okay? Oh, you're working on a name right now? Right on. Let's make me big. Can't wait till you come through. Yes, the chains need to be broken. Another reason I do this is, you guys, I feel like poverty is abuse. Poverty is abuse. In a universe so ripe and full, poverty is abuse to me. Okay? And this is a way for me to combat the abuse of poverty by putting people in a position to be financially independent, financially free, and pass on generational wealth to their families that they may not have known about before. Okay? Because poverty is abuse. We need to break the chains that oppress us. Poverty is one of those things. Okay? We need to free our mindset and understand that it's all possible. It can all work out. And we just have to go and be open to the things that can help us reach these goals. If you work for 30 years at Ford, it's not going to make you rich. You're not going to get $1 million. But if you work steady and invest some money, you could get to your $1 million if you put it in the right account. But you'll never get to $1 million if you just put your money over at Wells Fargo, Bank of America, or any of the other traditional financial institutions. You'll never get to $1 million putting your savings in a CD. You'll never get to $1 million. Well, you might. Okay, I'll take back the never. You might get there, but it'll take you a lot longer because the percentage of your return is so little when all this other products have been hiding in plain sight. Okay? Families in America have been using these systems since they were incepted. The specific IUL code was made up in 1913, you guys. 1913. It's 2023. We're all just finding out about some stuff. Okay? I had heard Waka Flocka once say, I never use the bank. I use my life insurance policies as collateral. Ever since then, I was on a mission. I was like, what is he talking about? And I was in finance and I didn't even know what he was talking about. Hiding in plain sight is what he was talking about. He's talking about an IUL, okay? I've been trying to increase my financial education. I inherited some financial phobias. Yes. Oh my gosh, I'm so glad you brought that up, you guys. You know how you guys we pick up habits from our family members, right? And we pick up habits from our loved ones. And if you grow up in a certain environment, you pick up, So did you pick up good habits or bad habits? My grandmother, bless her heart, would have me every Saturday come to her house And I would love to help her clean and love to help her balance her checkbook. And we would sit down at her dining room table in Oakland, and she would get her checkbook and her little 10 key calculator, and we would go through all of the deposits and everything, deposits and withdrawals in her checkbook. Back in the day, they used to give you a passbook, is what they called it, right? And in the passbook, it would have every time you went to go get $20, you needed your passbook. And you give it to the teller, and they would write down your balance when they gave it to you, the $20 they gave you, and then your new balance. Once they gave you the $20, the teller would initial it and give it back to you. That was our ATM receipt, you guys. We didn't have no ATM, but they were human, and so they would make mistakes, right? So then every Saturday, my grandma, we would take her passbook and we would take her bank statement, and we would go line by line and make sure everything matched and make sure her pennies were all where they were supposed to be. So I thank God for my grandma that she instilled that in me at such a young age, to like keep an eye on my finances, right? Because people make mistakes, she used to tell me. And we would find mistakes all the time. Transposed numbers from the tellers putting transposed numbers. And then it would happen all the time. So, but there are some other, that's a financial benefit I learned. Now, financial phobia is maybe not opening your freaking bills because you know you ain't got the money to pay them. So the bills come and you let them pile up. You put them over there and to be opened, but because you know your accounts ain't gonna be able to pay it, you just leave that right there until you get the color envelope. That means you better pay it now. Okay. Some people grew up like that. There's nothing wrong with that. It's just what happens in life. You know, do you face your problems head on? Or do you want to let them build up and fester until it's about to implode on your life? And either way is okay. Either way is fine. But how's the way you want to exist? How's the way you want to move? What's the mindset you want to engage around your finances? That's what I would beg today for us to all ask. Regardless of whatever inherited financial phobias we may have, and regardless of whatever inherited beliefs or stigmas that we've subscribed to around life insurance, I feel like it's time to like just shake it all off. That's a good way of putting it. Shake it off and look for ways that we can, maybe reassess our part in finances. Okay, I totally get it though. Now that's a great question. Mademoiselle is coming through with the questions. So let's look at an index universal life policy. Let me see, where's this? We're going to be all over the place today. So to talk about the index universal life, I think I'll share the screen right here. Let's get this one up. Go here, go here, go here. Just a second, you guys. Thanks for being here. I hope you smash that like button, smash the subscribe button on your way in. If you haven't already, ring my bell so you can get notified next time we upload a video. And thanks for coming through for our virtual marathon and life insurance drive during Life Insurance Awareness Month. If you have a policy, get it out. I'll show you how to look on page 3 and check your money if you're growing any. Let me go here. Go here, inviting. Now, let's see, put this here, paste, Latino. Okay, multitasking. I hadn't sent the link to my colleagues, and I knew I would pretty much be doing this first hour alone, but I wanted to make sure I got that to them. Now we're going to be looking at what the IUL is. Let's go to that question. What's an IUL? Fantastic question. So, an IUL is an indexed universal life insurance policy. And let me show you a couple of things. Okay. Now, you may have heard IULs are horrible. That's probably from somebody who can't sell it to you. They can't even market it to you. They can't even tell you about it. Like a lot of financial advisors, they might not have the license that I hold. So that means they can't talk to you about this product. And if they can't talk to you about it, then they can't get paid for talking to you about it. Therefore, they're not going to mention it to you. And therefore, it's a bad idea. You see the connection? And if you Google right now, IUL, you'll get a bevy of things that say it's great. And you'll get a bevy of things that say it's horrible. Okay? My suggestion is do your due diligence and research and look for yourself about what it is. Because most of the times when I dig in and see the people that are like, oh, it's horrible, it's mediocre at best, they're basically just lying to you. Because what's mediocre about a 12% return? What's mediocre about a 12% return? I feel like a 4% return is very mediocre. But what's mediocre about a 12% return? I feel like the 1% return you get from Bank of America that's mediocre. They don't say nothing about that account. They're like, oh, put your money in the bank. Because your return would be mediocre at best. That's not even true. No less than 6%, on average 12% and higher. And last year, one of them just performed at 44%. Is that mediocre or is that fabulosity? Okay. Here, we're going to get into the exact definition. The tax benefit that is attached to index universal life is directly though because of the life insurance. So let's get at that. I'm going to share the screen. I have so many little things open on the bottom. I don't know how to get rid of them. Oh my God. How do I get rid of this stuff? How do I get rid of all these little thingies? Every time I've shared something, it just becomes a thumbnail at the bottom. That is so bizarre. But the window for it is closed. So bizarre. Oh man. I don't know. I don't know. When is it ever going to go away? How do I get rid of this? I'll figure it out. Sorry, you guys. Okay, let's see. An IUL, Indexed Universal Life. So we'll just go here. Index Universal Life. let's see. Here we go. Calling it up. I want to be able to give you this visual. Thing. So here, I'm going to go back here. I'm going to do a share screen, make a no box at the bottom of the screen because it's important though. So we're going to share this screen. Understanding. Allow. Okay. Can you see this? So this is an index universal. These are going to be about understanding index universal life insurance products. Now, these slides specifically are from Nationwide, is on your side. And that is one of the products that I have access to market through. So I decided to show these to you. These slides are very insightful. There, can you see that? Make it big. There. So you need to balance your need for both safety and opportunity through an index universal life policy. So do you need life insurance but think your funds may be better off in other investments? This scale right here is just to show us the different opportunities for investments, right? And savings. So the light green over here starts off with things that are FDIC insured. So they're attached to traditional things like a bank, right? We've already talked about the returns there are somewhat safe, low returns, okay? As in CDs and savings specifically, right? And then the next piece of the pie is traditional fixed life insurance. That's traditional whole life insurance. That's guaranteed by the life insurance company, not FDIC. And the reason it's in the less opportunity scale is because, again, the growth there is capped at around 4%. So it's going to be about the same as its friend here, the CD, and if you can find a good savings account. So that's why these two are together, right? Now, when we get to indexed universal life insurance right here, it too is guaranteed by the insurance company, but it's right between less and more, because you have the potential of garnering much higher returns. Like I mentioned, 12% is a pretty good average. 6% is the illustration. So that's already 2 whole percent over what's traditional and safe. Then we have variable life insurance. That's partially guaranteed, but it's directly tied to the performance of stocks. So it goes up and down, up and down, up and down, and then it might go up for some time. But all of those downs ate your growth up, okay? It's partially guaranteed though. They say this is more opportunity, less safety. Everybody pretty much knows there's higher risk, higher reward. That's what that's saying. Mutual funds are not guaranteed at all, and neither are individual stocks. But again, high risk, high return, right? So this has moderate risk, high return. Let's keep going down. The 3 layers of tax protection that are available for life insurance. There's income tax-free death benefits. There's tax-deferred accumulation, as in some products. But then there's tax-free income. that is offered. Life insurance can be a powerful addition to your financial plan, especially for retirement income. The tax advantages are important to consider as life insurance can provide, again, income tax free death benefits, tax deferred accumulation, as well as tax free income. Okay. Look, I think I just got one of my colleagues is here. Yay, Corey, Berman. Hello, beautiful.
Hi.
Hi, thanks for coming up for my first annual Liam Life Insurance Awareness Month Life Insurance Drive Virtual Marathon.
All right.
I'm gonna be having this once a year. The whole month of September, I'm gonna be doing stuff every year from now on. I didn't even, I've been doing this since last year before. Is this year too?
Mm-hmm.
Yeah. And I didn't even know about Life Insurance Month last year. Nobody mentioned it.
I know. Didn't either.
Right? Right?
Right.
Thanks for coming up. How are you today, Corey? Let's have a second with Corey, you guys. Let's go right here. Hi, Corey. How's it going?
I'm doing good.
Excellent. Did the thunder finally stop in Maryland?
Yes, it did. This morning.
Right on. Is everything muddy?
Not quite.
Is it Burning Man?
No, it's just dry. But it's mushy.
Yeah. Right on. How's Brendan?
I'm good.
Hey, Brendan. How's it going?
Hey.
Nice to hear you.
You too.
Right on. Well, Corey is a fellow licensed agent. How do you come in hot, girl? What are your 3 favorite things about life insurance?
Protecting your family's heritage. Making sure that you survive the event of a loved one passing. And saving for the
Yes. Those are fantastic ways. I love it, Corey. Thanks for that addition. I'm going to get back to these slides. Let's see, where do the slides go? Right here. Because we had a great question on the screen from Mademoiselle, who actually was like, is Corey coming earlier? So Mademoiselle, there she are. Okay, so understanding index universal life insurance and IUL can help you build confidence with guaranteed death benefit protection, upside growth potential with downside protection. I don't know what that means. Okay, so the role of life insurance. Some life insurance policies, such as Index Universal Life, can help you accumulate cash value by crediting your policy with fixed interest. Okay, so a portion of your premium is going towards crediting your policy to cash, and a portion of your premium is going to pay for the life insurance that protects it from having to pay taxes and those kinds of things. Okay, so together, they work together to give you the ultimate protection. Some have a cap rate. That means there's a roof to how much they can offer your return. Some have a guaranteed minimum floor rate of payout. And then the participation rate percentage can also be included in there. Okay. Now, who benefits from an index universal life insurance policy? A legacy or estate planning. You know, I'm big on that, especially for my melanated people. We're behind, you guys. And it's not for lack of trying. Cough, cough, Oklahoma. Cough, cough, all the Black Wall Streets. Cough, cough, all the Black thriving societies that over time have been diminished because of whatever. Well, this is a reach around to that, you guys. This is a reach around to that because it's under your direct control outside of the scope of these things, okay? So that you'll be able to have the legacy and estate for your family that you create based off of your plan. We already talked about the supplemental retirement planning that these benefits have. where you can structure them in a way to pay you your retirement. That maybe you're self-employed, maybe you're an entrepreneur your whole life and you didn't pay into Social Security the traditional way. This is an opportunity for you to pay into your own type of retirement. Okay, obviously it's some type of supplemental savings plan, because you'll be saving money that's gaining interest and growing your cash. And there's a new thing coming, you guys. It has long-term care and living benefit solutions. So there's a hybrid happening where you can have living benefits from what used to only pay after you died. Okay. Long-term care is coming down the pike as a potential mandatory type of insurance on your life that you must have, is long-term care. For certain people in certain states, it might come up. I know out here in California, they're talking about it being a mandatory thing eventually. And long-term care is going to be required because all the Gerber babies are aging out. They're going to need assisted living. They're going to need care for their long term because they're hitting their 70s now. And so they're going to need to have ways of having that taken care of for them. So it's a big hot button issue right now. Now, I've already talked about structuring your IUL. Well, there are options to customize it also, okay? You can have optional riders. You can customize your policy to fit your needs. You can do automated income monitor. You can make MEC contributions, so no contribution limitations. Thanks to IUL's flexibility, you can have loan policy withdrawals and loans to help cover higher education, weddings, special interests and obligations, opening a new business, emergency funds, all those types of things. You'll be able to access your money that way. So because the insured owns the policy, they'll have the total control over how the money comes out and when it comes out and what it comes out for. Okay. A hypothetical example of how IUL works. Oh, they gave this one a 9% rate. So you're still earning money at the guarantee. It's all guaranteed, basically. Let me show you this one right here. So according to the rules of money, this last column right here, that's about IULs, okay? Of these three columns, just in the middle on how money grows, can you guys in the chat put what you noticed the indexed policy or situation offers that the variable situation and the fixed situation don't? Just in these graphs right here, does anything stand out to anybody? What about you, Corey? Okay, let's see.
Repeat the question again.
Oh, I was just saying of how money grows right here, of these three graphs, what is something that should stand out to people about the difference between fixed, variable, and indexed policies? What's something that should stand out, you think?
On the very last, I see lock at each step.
Exactly. Okay. Thank you, Corey. And that specifically is because of the index, you guys. The word index specifically means guarantee. These locks symbolize that guaranteed growth that indexed accounts offer. Okay. So they call this graph the stairway to heaven. So you put something in, it grows, and it locks. we have none other than the expert herself, my mentor, business partner, Dr. Elnora Webb, who's coming on, joining us now. And she will be able to also help edify all the products we're talking about today. She's an expert. She has directed colleges. She's on a mission to financially educate as many people as possible. 1 million families is what she wants to help protect. And I'm part of her mission. She's helping me with my mission to get as many people in my community protected as possible. She's an expert on IULs. This is her passion. And I'd like to share her with you now. This is going to be Dr. Elnora Webb, my mentor. Bam! Thank you for coming up, Dr. Elnora. How are you today?
It's my honor. Well,
Right on. Thanks for coming up. And look, you came right at the right time, Dr. Elnora, because you see this question from Mademoiselle at the bottom. What is an IUL? And I was just sharing this screen as an image of what the IUL could look like for someone. And so we were just getting to the Stairway to Heaven explanation here. And I would love for you to go ahead. And if you could, why don't you, well, first, I'm sorry, this isn't enough getting to know you time. Would you mind letting the people know about yourself? Just a little more edification for you. I'm sure I fumbled it a little bit. I just need them to know you're an expert and you're great.
Thank you so much. And I think echo is me. Let's see if this is the echo still here?
I don't hear an echo.
Oh, okay. It's on my end.
Yeah, I don't hear it.
Let me share with you in brief. I am honored to be alive. I'll be 65 in October. I was told when I was a kid that I would likely not live to the age of 20. Not only did I live beyond that, I achieved milestones that little kid was born to a 13-year-old, reared in foster care for a period of time was homeless. Exceeded even my high expectations. And fundamentally, I chose to lead. And I want to say that because those of us across the planet, including Mademoiselle, who asked this question, what is an IUL? We're consistently leading, and we take for granted.
They are saying there's an echo. I can't hear it. Can you hear the echo, Corey?
Something you did stop the echo.
Yeah, I can hear it a little bit. Hi, Dr. Elnora.
Hello, it's good to hear you.
You too.
So let's do this because there's no echo right now. Okay, so whatever was done, there's no echo. So let me just accelerate very quickly because we want to get to Mademoiselle's question. I hope I'm pronouncing your name correctly. All of us lead, and oftentimes we take it for granted. We get up in the morning and we decide to secure something that will help people. That's leading. We get up in the morning and we decide to make a difference in our respective roles, whether we're working for someone else or we're working for ourselves. That's leadership. And I, as well as Leah, we encourage people to be the chief executive officers of their own lives. That's real leadership. That's, as young people, my nieces and nephews would say, that's the word. Be our own leaders. And so what does an IUL do? It facilitates that. So let me just finish a little bit of the story of me. I went to college not because I thought I had a clue. In fact, I didn't think I had much of a clue, and I didn't think I was smart. After all, I was diagnosed as mentally retarded in grade school. And nothing to do with me, had more to do with people's assumptions about me because of the color of my skin, my birth origins, and what I was experiencing. So I never take for granted, we don't take for granted, Leah, Corey, the rest of us do not take for granted that people are X because of how they appear. We assume that we all have genius within us and we have greatness within us. And it's really understanding that we were born with it. No one gave it to us. We're born with it. And life is about actually getting to that place of experiencing it more. So when I went to college, someone said there was housing. I didn't want to be homeless again, so I went to college. And then, of course, I had to pay for it. So I worked graveyard. I worked on campus. And the good news is that what happened in the process is I was exposed to so many different disciplines. And because I didn't want to fail, not my wiring, I learned how to read for understanding. I didn't like reading, I didn't like writing because I had to feel. I love math. And I didn't know I loved math because it was objective. You either got an answer right or wrong. I'm steering off a little bit. There's a reason why I'm doing this, though. So when I had to read for understanding and write for understanding, and let me tell you, I did not write well at all. But I learned that it wasn't that you had to know everything at the moment you needed to know it. You had to grow into it and learn how to learn. And so as I'm reading about geography, I'm reading history, I'm reading Black history, Latin American history, I'm reading Native American history, I'm reading Asian, Pacific Islander history. I'm reading for understanding. I'm taking psychology classes, sociology classes, the humanities, language arts. I'm engaged, whether it's in a particular English course or something related that allows me to experience. I was in a drama group because I wanted to be hidden. That's kind of weird. I'll explain that another day. But the bottom line is all of these experiences, the sciences, the natural, the hard sciences, the social sciences, the humanities, and on, gave me a complement. And all of a sudden, my brain began to function in a way that it hadn't prior. And I woke up one day and realized I didn't have to just survive. I could actually design my life. I could actually thrive if I chose to. This epiphany was all transforming. Now, it wasn't just taking the courses, reading and working in order not to lose my space at the university so I would become homeless again. But by that time, I was already working full time. I had enough to take care of myself. I didn't need higher education, but I didn't know that. I was so wired and I was so fearful that I worked on surviving. And then I realized I could do more. Well, that's what led me to be in higher education for almost 40 years and ultimately becoming a college president, working different places at UC, the community college, Stanford University, ultimately being in 2 PhD programs. Go figure, this Black, Latina, Native American, and much more, who was diagnosed as mentally retarded in 2 PhD programs at one of the top institutions on the planet. In the way that I move forward, because I believe I was me and not my circumstances, we encourage you to do so. So what's the point of that story that Leah asked me to share? I probably shared more than she thought I'd share. Is because we are about the business of taking people where they're at, ensuring no one's left behind on the journey to financial independence. What does that mean? That your faith that you have, you're able to experience it as fully as you want. And we're diverse faith. You get to experience yours in a much more holistic and deep way. Your families, you're able to build them up in a much more satisfying, healthy, and remarkable way. Your own fitness, and not just physical fitness, the mental, the spiritual, your ability to have fun, all those things are magnified because you've taken care of one of the major stressors. You've eliminated the financial stress. Financial stress is the number one precondition to early death. Why? Because it's the number one reason why people have diseases. And diseases are the number one reason why people die earlier than, in theory, they should. Didn't matter what religious texts or philosophical texts, we're supposed to be able, our bodies, to live to 125, and some people say close to 200. Well, why aren't we all doing it? Well, let me get to the question IUL. And thank you for your generosity of spirit and time and patience. The IUL is one of our tools that we use. It's a remarkable tool. And I didn't know about it before I was 62. Again, I said I'm almost 65. Had I known it, oh my gosh, people I know, their lives would have been transformed even faster. The Index Universal Life is what we call IUL. We also call it a laser fund when it's max funded, liquid assets safely earning a rate of return. We also call it the financial pocket knife because it does much more than what it appears to do. Some people say, oh, that's insurance. And I say, okay, that's part of the deal. What do you know about insurance? Oh, I have one. I have a policy. Okay, what does that mean? Do you have the old kind or the new kind? Is there such an old and a new? I said, yeah. And all of them have value. So no one's inherently without value. So what do you have? Oh, I've got, and they say X or Y. And I'll say, well, that's not what an IUL is. I said, the powerful thing about an IUL, and it's much more than this description I'm going to give you. Think in terms of protection and think in terms of a bank. Well, the IUL allows you to build protection and a bank within the same policy. Can you imagine that? You have protection, and it's not just protection for your family or loved ones who are beneficiaries. You get to be the first beneficiary on your policy. So if you have a policy and you say, well, I have a policy, ask the question, are you the first beneficiary of their policy? Well, what do you mean by that? Meaning that if anything happens to you, you have living benefits, chronic, critical, long-term care needs, God forbid, worse off, terminal illness. You get to draw out of the death benefit and use it now while you're alive. People are like, what? I said, I'm not done. So some people choose to have that, and that's what's most important to them for whatever reason. And we have a number of clients, that's the priority. And then we've got a significant number of clients, the majority, they want that and the cash accumulation that visual that Leah was sharing earlier powerfully magnifies. And what is that visual? On the left-hand side or the right-hand side of your screen, when you're looking at it, it literally has compounding, it has protection, it shows accumulation, protection, and then what else did it show? It says tax advantages. So literally what we want is everyone who qualifies for this plan, and you have to qualify. And the sooner you find out, the better, because what happens? If you don't do it soon and some event happens, you may not qualify in the next moment or the next year or the next week. And we've had many people say, oh, I'm interested in that, but I've got to take time, and I have time because I'm only 25, or I'm 65, but I'm very healthy. It didn't matter the age, and yet it does. The sooner you do it, circumstances may happen that if you've taken care of it and you find you qualify and you qualify exactly for what you want, you're taken care of, an event happens, and God forbid any of those events happen to any one of us. Most of us have had events happen to us or loved ones. And if we're protected, that's optimal. If we're not protected, we may be worse off than just the event itself. And I'm talking about a life-altering event, an accident. You're doing fine, you're on it, somebody hits your car because they weren't being responsible. Or maybe they were being responsible, but they had an attack in their vehicle and it runs into yours. I'm not throwing any other example out because I don't want to throw that out in the universe. But the reality is events happen every single moment. The key thing is, are those events additive, complementary, like the birth of a loved one? Oh my God. Like someone experiencing something phenomenal that the family wants? Awesome. But too often the events are in the negative. They're in the inverse of what I just described. So being on the right side of this slide does what? It allows people to experience the best of these different phases of money. And there are many phases of money, and there are more than that's there. There's a decision phase based upon the vision phase. So you've got a vision of your life. You look to determine how much money you need to achieve that vision. You make decisions about how to get there. And after you've gotten the decision, you decide, you allocate. That's another phase. And then ultimately, you want it to be in a place where it's accumulating. And then you want it to be protected. And there's a way to have it protected, literally, all your investments that you think as investments used as cash, as premium to compound and be protected in a way through what we call index accounts. Let me tell you, when I learned about index accounts, within 3 months, I purchased no less than 25 books. I went from reading The Power of Zero, which is a quick read, literally gives a context about the nature of money and the infrastructure in these United States, all the way to reading The Laser Fund. In the meantime, reading Stress-Free Retirement, reading Money, Wealth, and Life Insurance, and on and on and on. And as I'm reading, I'm like, oh my God, I've read a lot of books, and you can tell from my library, I love books. This is just a small sample of all that I've read, but I read these books more than once because the power is in not just the initial review, it's in the studying and in the breaking it down and understanding how it applies to getting to a place where each person with whom Leah, Corey, and I and others work, they're literally on the path and they achieve financial freedom in a lifetime, not in 2, 3, 4 generations, in a lifetime. So the sooner one gets started, the better they are. And it's a long-term strategy. So IUL, Index Universal Life, basically is an instrument you've got to qualify for. And if you qualify, you have a capacity to build money where your money compounds using the power of rule of 72. And then 2, where your money grows protected. You see that index, Stairway to Heaven, as Leah said. Others call it Stairway to Financial Freedom. Whatever you call it, it literally accurately signifies what a tax code does. That many, unfortunately, of our CPAs, even tax attorneys, and others who are brilliant, who are appropriately licensed, don't know about. Some do, and they're helping a lot of people. And we welcome even them to contact us so we can give them more practical details and have it complement their book of business and take their clients to a level that their clients have never gone to. We have clients who literally believe they're po, not poor, po. And then we have clients who believe they're so wealthy they don't need any input. And yet, across the board, many of them have never heard of indexing. They didn't know that their money could work even harder for them than they worked to earn it. 2, they didn't know they could protect all of their premium and the growth on that premium. They didn't know, 3, that they can access those funds literally in an appropriate way, in a policy that's properly structured. That's the emphasis, properly structured, where they can access it tax-free. And get this, if they qualify, the money grows. Even though you may access part of it, it continues to grow as though you never accessed it. Boom. Does that help?
Yes, that helped immensely. Did the echo come back? I took myself off.
No, echo's not there. Oh,
Okay,
no,
great.
it did come back.
It did? That means I must have something else open. As my has the echo been there the whole time, you guys? I am so sorry. Technical difficulties. Has the echo been there the whole time, you guys? Yeah, I don't hear an echo.
We do.
Oh darn. Okay. That's muted. let me turn off this mic altogether. Did that help?
Yes.
Is there still an echo?
Oh,
Oh,
no,
no,
there's
there's
still
still
an
an
echo.
echo.
Oh, let me see. Okay, yeah, that was an excellent explanation, Dr.
Can I share something else, Leah? I think that will bring things home. So 3 things to pay attention to. All of us should. And especially now, given the
Given the
nature of the
nature of the
economy, economy,
economy,
I'm hearing
I'm
the
hearing
echo
the
now.
echo now.
Okay. 1, taxes. 2, compound interest. 3, inflation. All important to understand, and more than just, I heard about it, or I think I understand. And this visual that's up gives you one introduction to it. It's not complete, but it gives you one introduction. I want you to imagine something. Take $1. And many of us share this with young people, especially, but people who are much older than me hear it for the first time and they're like, no wonder I've worked 3 jobs and I think I'm being frugal and I'm saving money and I'm helping people and helping my family members and I don't seem to get ahead. Well, let's just take $1 that you have and you literally double it 20 times. So 1 plus 1 is 2. 2 plus 2 is 4. 4 plus 4 is 8. You got the point, right? Double it 20 times. How much do you have? You have over $1,048,000. Cool. In fact, many people look at their overall history, and we ask some of our clients who are inclined to do this, how much have you made annually? Okay, and what does it look like over your lifetime over your career, either as a business owner and or an employee? They give the number, and some of them are like, oh my God, I've made over 5 million, or I've made over 1 million, or I've made over 500,000, whatever it is, over a period of time. Just so how much do you have right now? And many of them, and it's not to attack, it's just to understand and for them to go deeper. That's why I'm talking with you now, because I have very little to show for it, whatever it is. But I'm glad that we bought a home. I'm glad we bought a car. I'm glad whatever it is, we've got these assets, but we're underwater right now, or we're just above the water in terms of being able to say we have real assets because we owe more than we gain, or we actually have a lot of assets, but we don't know how to actually convert things to liquid assets so we have a guaranteed retirement, or that we can assure that those funds last us for the rest of our lives. So let's get back to the 1 plus 1 is 2, 2 plus 2 is 4, 4 plus 4 is 8, 8 plus 8 is 16, 1,048,000 plus. Take that same dollar, add a 28% tax to the gain at each step in the process. How much do you have? I'm just going to go straight to it. You have a little bit over $48,000. And people are like, what? At $1,048,000 plus. How is it 28% tax? Think about where you're at in the country. At the federal level, you're being taxed, whatever that is. Whether it's a very low amount, it's all relative, right, to the person, or it's at the top level, over 30-something%. And just mind you, taxes have been at their height in this country over 90%. During the 70s, it was 70%. Now it's the lowest, and some people think it's the highest ever been. No, it's not. At 37%, and it's going to go up. Not we think or we fear, none of that, it's going up. So the question that we have is, why do people look at themselves and say, I did something wrong? I'm working 3 or 4 jobs, and I'm doing what I can, and yet I can't see more than 1,000 in my bank account, or 10,000, or maybe even 50,000, or 250,000, and I've made all this money over the years. Well, 28%, let's just say you have an even lower tax obligation, 14%. $1 at the 14% on the gains at every step, those 20 steps, you only have 78,000. Still almost $1 million gone in taxes. That's the devastating negative impact of taxes. I'm of the mind, this is Dr. Elnora's perspective only, that we should be paying taxes. I don't want to be in a society where I'm not contributing to the greater good, infrastructure, people's well-being, etc. So we need some level of taxation. The key thing is, if all of your earnings are going to taxes, that harms the person who's experiencing that, which is the vast majority of us in this country. We know a very small segment of the population are not concerned about taxes as much. Everyone's concerned about it to avoid an unfair share expense associated with taxes. Yet the vast majority of us don't even know that we can do what the 5% do. 95% of us don't know that we can do what the 5% does. The same tax codes apply to all of us. And there are 5 distinct tax codes that advantages all of us. And yet, who knows those tax codes? The 5%. Either because they're learned in that area, or they are able to afford financial professionals who provide that service. And guess what? We get to provide our service at no cost to our clients. So you get to learn from us individually, or your whole family, or you've got a team of people at work and you just want to have a kumbaya moment that's very specific to everyone enhancing their financial well-being. You can call on us and we could do a webinar, we can do an in-person, depending upon where you're at in the country. If there's a large enough gathering, we'll come to you and share what we have in order to get you to the place where you understand how to build the wealth that's important to you, for your family, for the community, for your business. So why did I use the example of the 1 doubled to 20? I want you to understand the power of taxes. So if you did 14% and said, oh, my taxes are so low, they're 14%. Just remember, out of that 1,048,000, you just have 78,000. Want you to think in terms of compounding. I won't go through an exercise in that regards too. The power of compound interest. Most of us are paying interest on a credit card, home loan, vehicle loan, a car loan, and we're just thinking, oh, it's only 4%, or it's 10%, or it's worse off with a credit card, 25%. If it's compound interest, no. When you compound it over a year, it may be closer, depending upon the interest, 50, 75, or 100%, folks. So take nothing for granted. And I'm so proud of Leah for having this opportunity for you to think more deeply, ask questions, and I'll leave it at that for now. Oh, inflation. I mentioned inflation, didn't I, Leah? Okay, so put that slide up again. Thank you. So when you think in terms of literally rule of 72, and just so that you understand, it's a simple rule. You just take the interest you're earning, you divide it in 72, and that's how long it's going to take for your money to double. If you got in a bank account, if you're fortunate to get 1% or more, you just divide it, you're going to see how long it's going to take. For that 29-year-old, my goodness, 72 years with a 1% return, inflation will eat up, he or she or they will not even have that 10,000. In the meantime, the bank can legally take that money, multiply it, and loan it out. And they're not loaning it out at 1%, right? Normally, whatever it is, a home loan, auto loan, definitely credit cards, personal loans are much higher than that. They're also doing what we encourage you to do. They're leveraging a type of account for their tier one assets. So they'll take your funds, put it in their tier one assets, and they'll witness it grow and compound, where that 29-year-old has to wait until he, she, or they is 101 years old. Well, the bank gets what? Over 1.3 million, or about 1.3 million by the time that person is 71 years old, if they're getting a 12% on average rate of return. Crazy. So what does inflation have to do with this? Inflation is really critical. If you can bring it down so that the whole slide shows. Thank you so much, Leah. Inflation literally, what was it at the height last year? 9%. And the government has been doing, various units of the infrastructure. It has to do with finances. I could talk about the Federal Reserve Bank. I can talk about different units. I don't want to get unnecessarily technical. And they're attempting to literally manage the economy in such a way to manage the possibility of out of control inflation. In theory, it's been reduced. And I use the word theory in particular. And the reality is, if you've got something that's in a fixed asset kind of policy or account that's less than inflation, you're losing money. If you literally have it where your interest return is less than inflation, you're losing the purchasing power of your dollar. And that's what people are concerned about. So inflation is no minor deal. So the importance of having something that literally gives you a consistent higher rate of return is what's powerful. Having something where you will never lose what you put into that particular account is even more powerful. Because literally, as you are taking advantage of this indexing opportunity, you see those lock boxes? They accurately signify what happens when you have an index account. As you place your premium in there and there's an interest rate of return, your account increases in value, gets locked in. Nothing in the market will cause you to lose anything. You're locked in. And we call it zero's your hero. We could say shiro, we could say whatever. That's gender appropriate. The bottom line is that index account opportunity is absolutely massive. And people, as they learn about it, and just because someone is ultra wealthy does not mean they understand or have even heard about it. In fact, folks we're working with, some folks have had millions of dollars, multiple millions of dollars for years. And some of them currently have most of it in assets that are growing in value. And others, primarily liquid assets that they're concerned about because they're exposed to the market forces. The good thing about the market, it tends to go up over time. Not always does every stock and bond go up. There's no guarantee. The bad thing about the market, it tends to go down and it plummets and it's unpredictable. There's no certainty there. The only certainty you have is when you decide on something. After that, when it comes to the market, you can hope. And you can hope that the strategy you've used with the aid of an expert, ideally, we recommend experts. We recommend people who have security licenses. We recommend having a team of complement of people who work with you, not just one professional, ideally multiple professionals, a CPA, someone with a securities license, if you're so inclined and interested in the stock market, someone maybe who's a tax attorney, a complement. And then we add to that by exposing you to instruments that none of those individuals may be aware of. Maybe they are. If we give you a complement of education that you might not otherwise have, and you get to just blow it out the water, whatever it is that's part of your big vision and your specific near term and long term goals. That's all I wanted to share at this time. Thank you, Leah, for the opportunity.
Oh, no problem, no problem. I hope that echo is not bothering us now. But that was fantastic information. I was looking for the slide particular, the one versus the other one. I didn't have it in my slide sheet,
Okay.
unfortunately. But that was an excellent example about this rule of 72 and the power of compound interest. I did speak earlier to the people about how, on average, traditionally we're dealing in this 1% here with traditional accounts. They say, work hard, save your money. You work 40 hours and save your money at 1%, right? The power of compound interest is you could potentially work hard and save your money at 12% with this guaranteed growth, with these tax advantages once you're educated to do that. So again, let me show you guys this QR code right here will take you directly to our landing page to get you set up with your complimentary financial review. We could do a complimentary policy review. We can just answer some questions. You can, like she said, book us to come speak to you. We do meetings with lots of women's organizations. We have some more coming up this month. We're literally about a crusade to get as many people financially free as possible. And it starts with our minds, you guys. Mindset is everything. If your mind is only telling you to save 1%, great, you did it. Awesome. However, if you can shift your mindset to the 12% and above, if you can shift your mindset to the possibility that 1% is too low for your hard work and dollars to grow, if you can shift that, then use this QR code and we'll be able to show you in real time how the strategies and structures we're talking about can complement your goals. Okay? Excellent. Let me see. There was this slide right here. Here, I'm going to show it back. Can you go over this one a little bit, Dr. Elnora?
I love
love
this
this one.
one. We
Oh, we got the echo now.
Okay, it's when we both talk.
Okay.
Okay.
Do you have any other YouTube windows open? Because once you come to StreamYard, okay, I don't either. So I have no idea what it goes, but I'll go on mute while you go ahead and explain this to the
Okay.
Okay.
This and can you reduce the size of this question that's here because it's blocking? Oh, there we go. Excellent. What this visual allows us to do when we're working with the client, we start off always with their priorities. What's their dreams, their hopes, their goals? And some people know exactly. They come in and it's like, this is what I expect to accomplish in my life. I want to look back at my life and know that I've achieved this with my partner, or if they're single, alone, and made this difference. And this is how much I need. This is my financial independence number. Most people have never heard of that. There are very few people come in and says, this is what I need at the end of the day. And they know things about their debt, their income, their overall a mortgage, if they have mortgage, definitely if they're renting a place, and they know if they have children, how much education funding they need to have set aside. So some people come in with a lot of that information and much more. Others come in and they don't know where to start. So what we do is that we literally allow them, thank you for bringing this visual up, is we literally encourage them to express to whatever degree they want those dreams, those goals. And we guide them through just some basic questions so that they can get to a place for some people that they've never been. They're like, oh my God, I've never done this before. And it's freeing because the whole point is to understand the details of one's current finances. I don't care how scared I was years ago to look at my details. When I did, I felt freer. It's like, okay, I thought it was a big deal. Now that I can see it all and it's out of my head, out of my feelings, it's on paper, now I can begin to address. But short of that, I have all kinds of assumptions. And then I leverage experts, people who know what I don't know, whether it's through books, through articles, or direct professionals with whom I was able to leverage. The bottom line is to do the analysis, a financial needs analysis first, and then ask the question, how much do you have now and into the future that's going to allow you in savings to actually actualize the dreams and goals you have? Now, the bottom line is, many of you know, that money is not the answer to everything. What many of you also know, in this society and in most societies, you need the means of exchange, money, as a way to get to where you want to go. You want to buy a house? Need some capital, right? Want to purchase a car? Want to literally redo your wardrobe because you've got a new gig and it's part of your new business that you're creating? We need financial resources. Want to eat well? Quality food with all the chemicals? Whatever we want to call those different food items, wherever they are at, need money. So the bottom line is how to reduce taxes, reduce debt, and increase savings. That's what we're all about. So once we've taken someone through the financial needs analysis, most of the time, but sometimes we share it with them, this other visual in advance. If you can go back to that, Leah. What we find is they tell us they want at least 6, if not all 8 of these items that are on there. So you see the list of 8. They want tax-free, tax advantage solutions. They don't want to have to give up all their money in taxes, whether it's now or later. They literally want to keep more of what they earned. They want to grow. They want their money to work harder for them than they work to earn it. They want zero risk when they take their hard-earned money. They call it whatever, capital, liquid assets, and they place it into account. They want zero risk. They don't want to worry about the market. The market's going to do what it does. And they want to leverage the market, but never be in the market. Makes sense? That's a whole nother thing we'll talk about. And then they want to be able to access the growth on that money. They want to access their money over time. And they understand that this is a long-term strategy. This is not like a quick get rich in 2 years. This is about a long-term strategy in order to build wealth. And the emphasis is on building. And when you build, you want to sustain. So I say to people who say, can I just do it in 3 years and just take my money out? Okay, you can do whatever you want to do. I don't recommend you consider this option if that's what you want to do. What I recommend you do is consider this option when you're ready to give yourself the gift of a long-term strategy. And it really is a gift. Think about purchasing a home. Most of us purchase a home for the long term. Even if we don't plan to live in it for the rest of our lives, we see it being an asset that we then leverage it, whatever the difference is between how much we owe, if anything, on it, and its value. We use that to pay for college for our kids. We use that to literally fund these kinds of accounts. We use that to build our business. Or we just use it as a legacy to pass on to the next generation because we're building generational wealth. So in the same way that we use that long term, we want to use any kind of plan long term. So this is a long term strategy. They want their They want protection. They want protection for themselves. They want protection for their families. They want protection for their beneficiaries. So that's principal protection. They definitely want long-term care. Most of us don't know this. At some point, definitely the older we get, and those of us over 60, out of 10 people, the majority will need long-term care during their lifetime. And most people say, well, I'm in my 20s, 30s, 40s. I don't need it. Unfortunately, a significant number of people who are not even 18 need long-term care because of an accident, because of an unanticipated event. And that's the power of coverage. We say Life Insurance Awareness Month. Some people, not all of them, probably not you, but some people have this old feeling about life insurance. Oh, that's when I get old, I need it. Really? You need it the moment you're born. We have something that Leah may have already talked about, and it's called literally $1 million babies. We help families ensure that their children are insured. And by the time they get to age 40, 45, 50, however it's structured, designed, and the amount that's placed in as premium can lead to that child who's just an infant now having at least $1 million in that account.
I brought that up.
Oh, of course. And whether it's 28,000 set aside for an infant, and that compounds the rule of 72, and it's in an account that's protected, not partially, fully protected per IRS code, and the family can access it for that child's education. You've already heard this from Leah, and much more. Let's say the child decides not to go to college. The child has used his or her or their genius in some way before they even finish high school. So they've built a business, and all they want to do is do world travel, or they want to take that money and augment or even supplant what's there for their business. They can do it. There's no restrictions, as there are with other kinds of so-called college funds. And we strongly recommend people do what works for them. We don't say there's one thing that works for everybody. What we say is know what you may not know in order to determine what works best for you. Okay? So then, of course, legacy. It's rare that we will come across somebody who's like, oh, I got mine, my kids got to get theirs. I've heard that. Unfortunately, when I was a kid, that was just normal. And the late 50s and 60s, people would say that. Not everybody. But I remember hearing that. Well, that doesn't make sense. Considering our history, our experiences as Black folks, as Latinos, as Asians, as Pacific Islanders, as white folks, from different parts of Europe, etc., and folks who are parts of all hemispheres on this planet. Why would we ever even think that? I got mine, they got to get theirs. Well, what I do value is that we teach our young people how to fish, as opposed to just giving them a bunch of fish and then they learn how to cook, but they don't know how to go out there and fish. I mean, literally and figuratively. Even though I had some horrific experiences in some of the foster care settings, I also had, in some of those same settings, extraordinary experiences. My brothers and I, in one of our foster care environments, right in the heart of what's called South Central Los Angeles, we would be responsible for 75 to 100 eggs that we went to a local store we walked to, brought them home, went to the garage, put them in a makeshift incubator, a box with lights. We turned the eggs around. They become chicklings, and we took care of them. We fed them every single day. We had roosters, we had ducks, we had pheasants, we had somebody else raise a pig someplace else, bring it to the house, and I was responsible for slaughtering it. At any given time, we had a lot of what we call, I'll jokingly say, barnyard pimps walking around the backyard. But literally, I can tell you how to raise some animal. Literally, I can tell you how to cultivate soil so it can have greens, peas, so that the peach trees, the apple trees, the plum trees were, I mean, they're out of this world. The point is the degree to which we prepare our young people, whether it's to know how to cultivate the land. And when you do that, then you also understand the nature of cycles. There's a time to what? To plant the seeds, and there's a time to cultivate the development of that seed, and there's a time to harvest. It's just the nature of life. So when we say be in it for the long haul, that's what we're talking about. And you don't have to wait until the end of your life for the harvest. That's the wonderful thing, because of the nature of these instruments. So it's amazing. When we show people this visual, they're like, we said, okay, now look at where you have your funds. Because the vast majority of people have it in a bank. Why? Because they want their money to be safe. It's reasonable. Unfortunately, 3 banks went out of business this year, and other banks will go unnamed right now are being held up by other banks. So it's a very distressing set of conditions that we're living in right now. But quite frankly, it always is. Something is always happening somewhere. And in a sense, that's part of the cycle of our lives. So the question is how to ensure that independent of the economic realities, what's happening with banks, what's happening with other businesses, that we're able to sustain ourselves. Well, this instrument, the IUL, is not a cure-all, but oh my goodness, it's so fabulous and responsible to the needs, or responsive to the needs that those of us who qualify for it have, and those of us who don't, unfortunately, just know there may be another way for you to leverage it through a family member. So it doesn't always have to be the self. It can be a partner. It could be a wife or husband, a child, niece, nephew, grandchild. So we're here to be creative with you, to ensure that you know what you could leverage. Did you know that only the IUL will address all those? Isn't that curious? And we also help people with fixed index annuities who are already around my age, perhaps, or even younger, and definitely older, who want to make certain they have lifetime income. Can you imagine having your own personal pension plan? Most people have never heard of that. Can you imagine being able to use, and that's what an fixed index annuity, or FIA, is. And then all equal. And we only work with A and A plus rated companies. We value, if there's a huge financial services industry, we value most that there's A and A plus rated companies that we get to leverage for our clients. So I hope that's helpful, Leah.
I appreciate you explaining that slide. That was super duper helpful. I wanted to go next to, I love interacting with the Curvies. So that was Mademoiselle's question, and we got very far. Oh, Corey's back. Great, Corey. Here she comes.
Sorry about that.
No worries, no worries. This is a marathon. Jerry Lewis gave me the idea. We might be here all night. You guys can go and get lunch and come back later. We're on a drive. So I had told specifically, Mademoiselle has been fascinating. She has so many already insights into what it is and the benefits of why to do this. However, in her specific situation, she was mentioning that she was her life was unpredictable. So she was afraid that she wouldn't have money to pay her bill. And so I mentioned to her that when people see the value of these products, but perhaps their finances don't match, that there's an opportunity to be a business partner if there was the desire. And so I was letting her know that, like, for me too, Like, I'm not exactly where I'm a work in progress, you guys. And I'm not exactly where I want to be right now. So my premiums are such now that they're in my purview now, but I also know that I'll be growing. So I anticipate being able to pay higher premiums just off of being able to help other people's families be protected, because it pays in this industry of financial services. Well, can you speak to that a little bit?
Absolutely.
Absolutely.
Thank you,
Thank you.
Leah. So I want you to imagine you, Mademoiselle. I don't know your background, but I appreciate your directness and transparency. Whether you have a significant amount of money or have so little that it creates a level of discomfort, we encourage you to do what you can to eliminate fear. And even if it doesn't seem rational, ask yourself what it is that you need, you want. What is it that I need and what is it that I want? They may be the same. Want may be far beyond your needs. But you have a right to have both sets of desires addressed, your needs and your wants. They're both important. What are your needs? What are your wants? Write them down. There's power in getting it out of your system. Everything that I'm recommending to you, we do. So we would never recommend something that we've not already done or are doing. Okay? So once you've done the needs and wants, you put it down. That's one level. The next is asking yourself, am I interested in helping other people as I learn how to help myself? Am I interested in helping other people as I learn how to help myself? And that question is so important to being in this business, because if the wiring is not to help other people, then you may be in this business for a short term, make a few dollars, and not as much as you could that could get you to financial freedom. And whether we're talking about, and I don't know if you're religious, I don't understand religion fully, but let me tell you, whether you're religious and you read religious texts like the Bible, the Bhagavad Gita, I call it a religious text too, the Quran, the Torah, the Buddhist principles, Taoist, whatever, or whether you're philosophical and you read a lot of those texts, a lot of them say the same thing about the following. And it's like throwing a boomerang. I don't know if you did it as a kid. I did. Loved it as a tomboy. It always came back with greater force. So the more you give, the more you receive. And you get it compounded sevenfold and more. And when you do it because it's just your wiring, or you want it to be your wiring, it may not be your wiring, you're going to get back abundance. So what we do, we just happen to care. We happen to also care about people. We care to make a difference. That's why I established something that allowed me to live a vision that was given to me. That's a whole nother conversation. That million families financially free, it was given to me. I wrote it down. I was like, what the heck is that? Then 100,000 was given to me. I wrote that down with some words, 10,000 with some words, and 100, all these multiples of ones. It was like, what is this about? The bottom line is I care to make a difference, and I want to do it with people and through people. So the 100,000 is in support of people and with them. The 100,000 is with ambassadors. 10,000 is with business partners. 100 are individuals who've actually achieved what we want the million to achieve in record time. So now I know what that vision is about. And so I'm on the right platform for that. And everyone has their own unique vision for their life. So ask yourself the question, do I want to help people? And even if it's just a small group of people, 50, 100, 10,000, you get to choose that. And then we say, we would love to work with you because that's our business. We have engineers, we have real estate brokers, we have registered nurses, we have doctors, we have IT specialists, we have people in a variety of places. We have home bound individuals who are focused on their children while their partner is out bringing income, or we have homebound people who have no source of income, who say, I'll figure out a way to get licensed with your help. And we provide a complement of help. I'll figure out a way to ensure that I'm on the platform, approved by the different companies, the carriers, and we help facilitate that on your behalf. So if you're interested in working with us, we just ask you to care about people, to want to make a difference in your own way. And then you use that QR code and sign up for a special meeting. And it would be our honor to give you particulars. So what do? And we do it every day and as much as we want. We're independent, licensed financial professionals choosing to be interdependent. What does that mean? We choose to work in partnership, in collaboration with one another. Leah has folks that I can help. I have folks Leah's going to be able to help. We help each other in order to get to our specific goals. Leah said she's helping me. I'm helping Leah. It's the nature of what we do. And so why do we do it? Because we want to make a positive impact. For me, the legacy is a lifelong legacy. I hope to be here at least to 95. And every year I'm going to do this. Every week I'm going to do this. Every day I'm going to do this. And I get to get up as early as 4 o'clock in the morning, go to bed as late as 1. I get to get up and start working at 9 and work until 6. It's my agenda. And I get to bring in as much income as I want. So one month it was one level. Another month it was a different level. I can bring in as much as I want. And without going into the details of all those numbers, we have people who are blowing it out the water. And we have other folks who are like, I just want X for the year. And I got it. And I'm maintaining things at that level. So we help people get to a place where they're no longer like you scared. They have the financial stability. But then when you get the stability, whether that stability is 50,000 a year, $250,000 a year, $500,000 a year, $1 million a year, I guarantee you, like the vast majority of people, you're going to say, oh, wow, it was a struggle initially, but it actually is not that big of a deal. And now I just want to blow it out the water because I want other people to experience this. That's what this is about. So we help people literally be the CEOs of their lives. That's it. Where they're leading by example. And it's absolutely awesome to witness people transform from being fearful or scared and for rational reasons, for real reasons. Some people literally started and didn't have enough to pay monthly expenses. And yet they have to figure out a way. So they're doing all these odd things in order to bring it in, whether it's they have the benefit of doing Uber, Lyft, or delivering food. Those are small amounts of money requiring a lot of energy and effort. And what we do is get to expose you to literally how you can build massively and then reduce the amount of time and increase the amount of impact. Does that help?
And this is still about the insurance also, because getting you a way to pay for your premium is a way to help you with your insurance. So these are just a few of the um, things that traditional employment uh, you would have to deal with. But with us, there's no employees, no inventory, no workman's comp, no payroll, no overhead, no cold calling, no flyers, no boss, no quotes, no discrimination. Actually, when that whole affirmative action thing came down and they were trying to overdo the affirmative action, I was like, this is affirmative action. This platform is affirmative action because there's not something here that's ready to stop you from helping families. This platform is affirmative action because we can all do it. We can all partake. There are not the traditional barriers that require affirmative action. So there's no liabilities, no experience necessary.
And I want to
to
speak to that.
Okay.
And with our particular leadership development organization, Pinnacle Elite, just to illuminate this, we have over 60 different languages spoken. People from all over the world who chose to live in these United States. And definitely native born, in addition to foreign born, were part of our growing network of licensed financial professionals. And we are so proud of that. And the reason why we're so proud of that is because we literally want folks to see themselves. You're Black, we want you to see yourself. You're male, we want you to see yourself. You're in wheelchair bound, we want you to see yourself. And yet there are no bounds for any of us. Physical, emotional, ethnic wise, all the things that we bring to the table actually should add value to our ability to help others, in addition to helping ourselves. So you're on it. There, not only are there no constraints, we're about the business of helping people build their mindset. And mindset is powerful. A lot of my readings, a lot of my thinking, my meditative prayers are all about ensuring my mindset is what it needs to be. And what does that mean? I have paint that I had placed on my doors and on my walls so that instead of having to have a flip chart and I write on and I put it all over my office, I literally write on the doors. So this morning I wrote a new affirmation several times. And literally it's to ensure that in the morning, and I do it again in the afternoon and again before I go to bed, I am reinforcing a predisposition that leads to the outcomes that I experience. And when we do that, we actually blow things out the water. We exceed our high expectations because we're just basically, while we're awake, we are moving in the direction. While we're asleep, we actually are processing. And I think that's the real wake state. We have the illusion of being awake when we're talking like right now. The real awake state when we go to dreams and we take it to a deeper level. And we let the universe work its magic. And we wake up refreshed and we do it again. And then we're moving. And before we know it, we've achieved. Now we've got to create something new. And I love what you said, Leah. There are only restrictions when we decide there's restrictions, and it's usually in our mind. And our mind is in every cell of the body, and the mind emanates outside the body.
Definitely. I appreciate you complimenting what I'm saying. There's no HR department because you're your own boss. You'll be your own CEO. There's no theft, no politics, office politics, none of that. No set schedule. So no being chained to a desk, no lease to sign, no territorial limits, No big upfront costs. It's under $500 to get your license, your insurance, and take your class. In most states, you can be up and running for a minimal cost. That's all a tax write-off anyway. But the benefits, you can forego 1 through 20. The benefits of being your own boss in this particular industry is the pay cycles twice a week. There's residual income, there's trial income, there's renewal income, 1099 income. The reason why that's so important is because of the tax advantages that go with being your own boss. 1099 employees, you get to write off so many things. So many things. My StreamYard subscription, I get to write that off. I'm a 1099 employee. When I go to the when I go to my convention, a 1099 employee. That's a write-off. That was a business trip. So many different ways to take advantage of not only the passive income, bonus pools, advances up front, unlimited, as Dr. Elnora said, unlimited income potential. Okay, so all the times that you've been at a W-2 and you know for a fact the people at the top are getting millions of dollars in bonuses while you're working for whatever, you too can have unlimited potential. Okay, and it's an ownership program. Even our financial education is about empowering you to take ownership of your assets, ownership of your finances, and ownership of your financial future. And the platform that I do business off of also allows me ownership of this program. Okay, so I'm super excited. And it, like I said, anybody who wants to partake of our QR code right here, once you click on this QR code, you'll be taken right to our scheduling page. You'll see the lovely Dr. Elnora up there. And look, Dr. Elnora, somebody already went. And they were like, where is it? Where is it? She was like, oh, I don't see a price. Oh, Zara said, I don't see any fees for your sessions. Exactly. Everything we do is complimentary. Everything we do is education based.
We do not charge. Can't emphasize that enough. As Leah just conveyed, we provide complimentary services. We want to accelerate your pace, Zara, to getting you where you want to be. And you needn't worry. We can explain that at another time, how we get paid. The bottom line is you get to do whatever you want to do, whatever works best for you. We get to inform that. And if you use any of the products or services that we recommend, all of your contributions go towards that. Nothing comes to us. That's the powerful thing. And yes, we do get compensated very well from any carrier that you choose to use. And the emphasis is this: we work for our clients and we get appointed with the many A and A+ rated carriers. So we get to represent them, yet we represent what's going to work best for our clients. And not all clients need the same thing or will benefit from the same organization. So that's why we love not being captive to any organization nor to any product or service.
Yes, which always puts us in the position to do what's best for our clients, because we're not held captive to one thing. So we don't just have to push one thing on you, regardless of it. Maybe that might not have been the best thing for your situation. We have hundreds of carriers to choose from. And as Dr. Elnora mentioned, they're A and A+ rated, which means they pay what they say they're going to pay when they say they're going to pay it. That's what the rating means. And these are just some of the carriers that we have access to. I'm not sure. Hey, in the chat, can you put a 1 if you've ever seen any of these carriers' names before? I'm sure you have. I'm sure you have. And because like we always see the Nationwide is on your side commercial. So that definitely is probably one that you've seen. But we have the luxury, literal luxury of pairing our clients with their best premier product for their life, with us outside of the picture. It's all about our clients' goals and dreams and what they want to do. We set up structures and strategies to get that accomplished. Okay? That's excellent, Dr. Elnora. Was there anything else you wanted to add about this slide?
I think the key thing is you said part of the reason why they're A and A plus rated is because they pay out. Another key thing to note is that they've got staying power. Whether it's Allianz with $1 trillion in asset, just think about all these different companies, those and up to about 85 total, have multiple $1 trillion in assets. And all of these companies have been around these alone have been around for over 100 years, with one exception, Nationwide, and they'll be over 100 years old soon. So they have staying power. And part of their rating is based upon the reserves they have in place. So they are about the business of building capacity, being financially strong. And in fact, when people say, I'm interested in this, I'm interested in that, they get to see the ratings for those institutions. So that's all I'll add. You did a brilliant job.
Awesome. And I want to establish our credibility with the companies that we're accessing. Here it is. So there, I hope it stops. Glitchy. Uh-oh. Is it this one? There. Wait. There. Okay. So Dr. Elnora already mentioned that we're Pinnacle Elite. So that's exactly our leadership development platform that we're using. Do you want to explain this slide to them, Dr. Elnora?
Yes. In brief, just know that Aegon is a huge corporation considered to be too big to fail, based out of the Netherlands, and prior to the 1980s, chose to come into the United States because they want to extend their reach and serve more families. And when they assessed the lay of the land, financial services, Transamerica was in lockstep with their vision. Transamerica wanted to serve more the middle class and others. And heretofore, most financial services industry related organizations were serving the corporations and the wealthy, or at least folks who were bringing in well in excess of 500,000 or greater. And some organizations only $1 million and greater. So when Aegon purchased Transamerica, so for those of you who are familiar with Transamerica, this particular pointy building is in San Francisco, right in the heart of San Francisco. I see it almost weekly when I drive into San Francisco. Literally, understand you're looking at Aegon. Aegon and Transamerica are one. And then they realize we need a platform. Yes, we've got a lot going. We've got the infrastructure. We've got a lot of clients. We're extending the clients. We need to leverage World Financial Group, which is an administrative and marketing platform. Administrative in that other companies were vying to be part of World Financial Group because they wanted World Financial Group, through their licensed financial professionals, to let more people out there, the millions of people out there, know that they were offering this product, this service, these types of products, these types of services, and here are the benefits. And they couldn't do it in the way they wanted to do it alone. So yes, we see some marketing ads on television, we hear it on the radio, we see it in publications, and yet when they take advantage of those of us who are licensed financial professionals, like, Leah, Corey, and I, they get more of the word out. And so thus they purchase World Financial Group. So you can go and do a Google search of WFG. Not all WFG online is the same. So just know that. But World Financial Group, we say the acronym of WFG, is literally a part of Aegon and Transamerica. They're all one. Now, why is that really representing strength? It's only representing strength in that there's literally teams of individuals who are about the business of making certain that only the A and A plus rated companies are on the platform that World Financial Group sustains as part of Aegon and Transamerica. They make certain that brokerage firms can be developed like Pinnacle Elite, that's been around for over 20 years, created by Eric Olson. And then as he married this remarkable woman, and even before they were married, Sandra Olson, built up Pinnacle Elite to provide leadership development training so that more people become brokers and are on the WFG platform. And they build their book of business. They build their teams of licensed financial professionals to literally reach millions. So we said 1 million is part of our focus. Well, Pinnacle Elite, the old vision was 10 million. Now it's blown. It's way out. It's more than 100 million. And how many folks we have in the United States alone right now? Well in excess of that. So we want to make certain that people have the best products and or services that's going to help them reach their financial goals so that they can literally live the lives they want. Ideally, all of us have values that we're consciously aware of. All of us already has values, but we're not all consciously aware of our values. And the power of being aware of one's value is literally understanding the personal value one is, period. And so the wiring then is to say, I deserve. What do you deserve? I deserve to feel this way. I deserve to be this way. I deserve to experience these things, etc. Okay, what do you need to feel that way? To experience those things, and on and on. And then you leverage those of us who are about the business of helping you not only clarify that big dream and those specific short-term and long-term goals as it relates to how to get there financially. It's you're able to build up your own portfolio beyond what you may have now. And you're able to, on a regular basis, whether it's semi-annually or annually, look at how you're progressing. Does that help, Leah?
Yes, immensely. I appreciate you taking the time to show the people what is going on. Okay, wait, this one? Oh, I don't have it on the stream anymore. Just a second. Let me add this back to the stream. No problem. I was going to put up the slide about the different financial solutions that we offer and the things that during Life Insurance Awareness Month, during this Life Insurance Drive virtual marathon, that we wanted to share with you are things that you may want to look at. Definitely, if generational wealth, leaving a legacy, and protecting your families is something, here are some things that you may want to look at. And it's exactly what we do. Here we go, presenting. If the computer will participate, sharing screen.
And you bring that up. Let me share that this is not an exhaustive list that you're going to see that Leah's going to share. Just know, think in terms of the big picture. We get to be educated and choose to continue to learn and grow. We don't believe there's a finite amount of information we should have. in order to help our clients. So we're continuously doing that. So when we say financial independence, when we say financial freedom, when we say financial health, when we say whatever is applicable to you, because you're the one that's deciding what you need, we're saying we're going to help you in whatever areas that's most important to you. And it may be one of these areas, it may be all 6, or it may be 4. This is what we do, and we do it very well. Thank you very much. And I say that not out of any sense of arrogance, but really out of a great sense of being humble, because we not only rely on the folks you see here, we rely on up to 15,000 people who are part of our network. Now, there's a core of 50 of them that are just brilliant. We get to leverage them all the time. And we could talk about the ridiculous amount of money that they choose to bring in every month. We can talk about how we're going on trips all over the world because we're part of the fastest growing, largest financial services leadership development team in the country. At least $1 million of the assets that are generated out of this organization goes right back into it to pay for us to be in these remarkable places on the planet for leadership development purposes. It's awesome. So we ask you, where do you see your greatest need? And my dog is barking like, yeah. And so is it with increasing your cash flow that you actually have enough, but you need to know how to manage more, or you have a wholly insufficient amount and we can help you there? I'll tell you about this one client. This was over a year ago. Brilliant woman who's been in several careers. She's now she's probably 73. She was 71 at the time. Am I right? Yeah, I think so. Anyway, I won't give too much discreet information so it's known who she is. I'll keep her confidentiality. The powerful thing is when she came to me, it was on the strength of a referral, which we do referrals every day, all day long. And that's how we stay in a place where we give people who are looking, and people are looking for us, but they don't necessarily know. So we need you to let them know that we exist so that they can get what they need. But here's what she did. She says, here's what I need. And I'm 71 years old, and I think I want to live until the age of whatever it was. So we assessed her financial outlook, looked at the discrete details, what she had in terms of retirement plan, what she had in terms of savings, what she had in terms of expenses. We went through all of that in relationship to what she wanted to experience in terms of monthly income, annual income, and for the rest of her life. And there was a big gap. And the gap actually didn't require a product or service. I was able to assess it. And when I got back with her, I said, well, if you did this instead of this or this, whatever, you really don't need a particular product or service. Well, I want to pay you because, you spend all this time with me. I got to pay you something. I said, well, let's just deal with one thing at a time. Let's focus on you. Let's not focus on me. It's not about me. It's about you. And so when I walked her through asking her a series of questions, she was like, you're right. I don't need a particular product, but I'm going to pay this guy next week X amount of dollars. So that's like $16,000 or something to help me address my debt. And then another flag went up. I was like, okay, help me understand what that guy's, I don't know. I'm going to meet with them. I said, well, I'm going to recommend you do something. Please go meet with him because you made the commitment and it's important to you. But please do not take a check or any credit card. Take no money. She went, I won't talk about the details. The bottom line is she didn't take any money. She came back. I said, okay, let's spend a few hours. And folks, in less than 4 hours, my spending with her, primarily asking her questions, recommending that she does certain things. She found a way to take care of that debt using her 16,000, keeping it literally in 6 months. She didn't need a particular product. She didn't need a particular service. Well, she got a service from me. She didn't need to pay me. She was like, oh my God, this is incredible. And she's older. She was in panic mode, as most people are, whether they're in their 20s or their 70s or their 80s or their 60s. They're in panic mode when it comes to having debt, especially if you're not used to having debt, or you take pride in having things in order and you don't have it in order from your perspective. The bottom line, we're about the business of helping. If you need something, that's what our business is. And if we can provide it, that's what we do. If we know someone who can provide what we don't provide, then that's who we connect you to. If you need someone with a securities license, we're choosing not to have securities licenses. We can, but we know a lot of good people who do have securities license. If you need someone who's an attorney, we're not attorneys. We know some legal things. That's not our area of expertise. So we'll connect you with the appropriate attorneys that are asset management or asset leadership attorneys. They are familiar with estate planning or their expertise in estate planning. So we do a lot of things, and literally we start with which one of these are important, or multiples are important, and then we go deeply. Does that help, Leah?
Immensely. I know part of coming and working with this platform, you and I did we went through all of these things. And for me, you guys, honestly, I wanted all six. I wanted all six, you guys. And it's okay if you need all six. And it's okay if you're a little older. We can still work on ways to strategize to help you get as many accomplished as possible. I felt like when I did this personally, it was mind blowing and eye opening to go through and identify. I mean, outside of me knowing I need more money, but for me to get clarity is real big with me right now. And I was able to get clear on where I needed more money and what to focus on first based off of my personal financial review, which, as I keep saying, use this QR code right here and we can get you set up. But it was eye-opening because you know that thing about knowledge is power? It really is. I mean, I'm much more scared of what I don't know. And the fear around just knowing there was bills and desires without being clear on the why and how much or the order of it, it was super beneficial. So I hope you do take advantage of the complimentary financial review that we can do, where we will help you identify where you fit in here. If all six of these are a need, then the financial needs review will be able to say, okay, well, if you only have 6 months of emergency funds, but your goal is 2 years of emergency funds, then here we can do this. Okay, if your child needs to go to a 4-year university, then here's what we need to do this. Okay, if you have 3 houses and some land and no trust, please have a trust if you have that type of property. But if you happen to not have a trust yet, then we have things to help you identify where you need asset protection, let's say, which is a trust.
Let's stop here for a moment.
Okay.
You hit a nail, and it's important to literally make certain it penetrates the wood, the steel, whatever the material. Trust, living trust. And there are many different types of trust for different conditions and to ensure that people get the particular outcome they desire. People are like, I already have a will. I'm good. Okay. And So as opposed to us telling them, well, the will is insufficient, we ask, why do you have a will? And what do you think the will is going to do for you? And most people say, oh, it's going to ensure that my assets go to my beneficiaries, the individuals I've outlined in my will. And we say, okay, are you sure? Well, of course, it's my will. I've signed it. I've had it notarized. In fact, I have an attorney who signed it as well. Well, that's good. But did you know that short of having a trust, your assets, whatever they may be, definitely real estate, your bank account, all of that will go through. And if you have children, everything will go to a court, a probate process, through a probate process. And in an ideal world, that judge assigned will make a decision or decisions that are aligned with what you have in the will. I said, however, there's no guarantee. And not only that, wait, I don't have to go to probate because I have a will. Yes, you do. If you have a trust, you do not have to go through. In most states, and unless we know something, unless there's something we don't know, you do not have to go through the probate process if you have a trust. If you do not, having a will is valuable, but having a will with a trust is invaluable. Because going through probate, you're going to have to pay whatever court expenses. Well, you won't, whoever that person who owns the trust is a reflection of their assets. They won't be there anymore. But they're thinking they're leaving behind a particular legacy that may or may not be actualized. Well, what do you mean? Well, there's an actual case. One of our attorneys is working with this family. They were in distress mode because the mother died and was leaving her child through the will process. Names have to be on the deed, not just in a will. Oh, there's more to that than that. Yes. Learn your lesson in that regards. So, but we want you to speak with an attorney about even having children's names on deeds, because there's a way to avoid capital tax gains, tax consequences. So having it on the deed is not necessarily 100% ideal. So you want to do things in a particular way. And we're not attorneys, so we're not going to provide legal advice. We're going to recommend that you leverage us and we can connect you to an attorney who can provide you with the right kind of advice. But going back to it, this particular story, very quickly. So the mom dies. The daughter in the will is supposed to stay with the grandmother. The grandparents are in distress mode. They're not happy that their daughter died, but they're going to take care of their grandchild, or so they think. There was no trust, so the probate process is activated, and the will is conveyed or provided to the all the appropriate legal folks, the judge, the attorneys, and you may have an attorney for the family that you didn't want. But certainly there's an attorney representing the court, there's an attorney representing the family. You have to pay those expenses. And so ultimately the judge decided against the grandmother, and said, you're too old to take care of this little child. You don't have enough energy, et cetera, et cetera. Made judgments based upon observations, limited in a court room. And that child was then put into social services care, and the family, the sister of the mother who died, did not want to have children. That's why she didn't have children, and felt like her mother could take very good care of that child, and said, oh, no, I'm not a mother type, so I can't do it, and I would not be the best person for that child. So no one wanted to take the child who was younger in the family. So the judge made it very clear, if you don't take her, she's going into foster care. The good news, if this is good news, and we really don't know, is the sister did take the child because they didn't want the grandchild in foster care, or the child, her niece in foster care. The point that I'm making is that a will is powerful, it's important, The will should be in a trust. The will specifies where you want your assets to go, all of them. And if you are responsible for a child or children, who you want to take care of your child or children. And if there's assets that go to the child, who's going to take care of those assets, maintain them, be the fiduciary in order to transfer those assets appropriately and correctly to that child. All of that should be within a trust.
Yes. The trust is so important. I shared with the people earlier that prior to coming to this platform, I did have access to life insurance. It wasn't the $1 million policies, no $1 million babies over there, but it was really interesting. The mindset at that place was, oh, let's give all of our clients a complimentary will because they didn't deal in trusts. You see what I'm saying? So people will tell you what they deal in as if it's the almighty everything. When you have access to numerous products, numerous instruments, then you're able to find and identify the best one, not just be like, here, take this. You know? So what Dr. Elnora was mentioning was we do have access to attorneys that can help make sure that we get your asset protection set up in a way that's complementary to your goals and your desires. So we just don't want any probate situations. That's what we don't want. I also mentioned poor Twitch, rest in peace, had no will. He didn't even have a will. He definitely didn't have a trust if he didn't have a will. But his poor wife and their kids had to wait, and their probate process was very short. I was surprised that she only had to wait like less than 8 months to finally get the money from Twitch, but they didn't give it all to her. They decided that she was only allowed to have a certain percent of his assets. They didn't give her 100% of the assets. You can Google the story, you guys. She and the kids didn't even get 100% of Twitch's hard-earned assets.
And yet Kobe Bryant, what did he do? He made certain his family had at least one IUL. So when the tragic circumstances happened that led to his death, his daughter's death, and other loved ones, people with whom he worked, $30 million check was handed over to his wife right away. Didn't go through probate. IUL did not go through probate.
Exactly. Isn't that incredible? So I was just offer that anything that's tickling your ears today that we're talking about during Life Insurance Awareness Month, be sure and do your own due diligence, do your research, and then scan this QR code where professionals like us can answer your questions and get you on your road to generational wealth and financial freedom. Okay. I don't want to keep all your day, Dr. Elnora. I know you're super duper busy. I so appreciate you for coming through today. I do have a couple more things I want to share. In the chat, if you're smashing the button, sharing the video, that'll help us stay in the algorithm during this marathon because it's super important. I told you guys how MIMS, Make It Make Sense channel, just yesterday was holding a virtual fundraiser on his YouTube channel, Dr. Elnora, because a mother of 3 died. Exactly. And so I started this whole discussion off talking about that in particular. This was already scheduled. I had no idea my good friend was going to be having to do that. But that's life. We never have an idea of when the tragedy is going to strike. You never know if you're going to get that tomorrow. So time is of the essence. It's super urgent. Start today. The woman didn't think she was going to pass, obviously. She thought she had another day, another year to get that life insurance policy in place. I bet her phone was insured. Her car was insured. Her mortgage was insured. The electronics in her house was insured. But the person who was providing for those 3 lives needed a GoFundMe, needs a fundraiser. Mm-hmm. Can you speak to that a little bit?
Not only can I speak to it, I'm getting emotional. And many of us choose to be in this business. What we do far exceeds what we call, quote, insurance, unquote. We're about the business of helping people transform their lives, enhance the quality of their lives. Now, especially folks with a legacy of not knowing that they can actually live in a way that edifies their spirit, builds their family. Too many of us have been living in distress, assuming that that's normal. And so we die early when that's not necessary. Now, one can say, well, you're not God. You don't know what's necessary. You're 100% right. I don't even know what the Great Spirit really is. I call it the Great Mystery sometimes. I do know there is a universal life force. I call it unconditional love, from which we come, we're part of, we return to, and we get to live this life. And I think the birthright was our being wealthy, not just in terms of money, in terms of mindset, in terms of feelings, in terms of gifts, in terms of giving, family, loved ones. That's our birthright. And yet we're not all living the birthright for all the rational, irrational, and non-rational reasons. There are reasons that we can influence, we can control, and that are out of our control. The point is, I firmly believe we get to show up the way we want to. So I got emotional. I had to say those things first to just calm myself down. I have, as of, thank goodness, this past week, 61 nieces and nephews. 3 were born just recently, 3 more nieces. They're all great nieces. And then one of my nieces will go unnamed. She has 7 children. She's beautiful. And her and her husband been together many years. The oldest child is taller than her, and she's almost 6 feet, excuse me. Beautiful children. So in my family, we're about the business of getting folks covered. Without giving the whole story, I get a call from another niece, her cousin, apologizing to me. This is months ago. And I didn't understand why she was apologizing. But when she told me what she told me, I had to sit on the floor and just figure out a way to kind of let the floor keep me grounded. This particular niece had not contacted me or anyone else to get covered. Her husband died. 7 children. In my family, and everyone in my family should be covered without exception. Not all are, and not all believe they need to be, especially when they think they're young, especially when they think they're going to whatever, especially when they fear or believe they have insufficient, whatever it is. So without making this about me, and yet it is about me, it's about each one of us. I just want you to understand things are going to happen all day long, every day, every week. I started off saying I'm fortunate with 61 nieces and nephews. And I am, extremely. And yet the clock keeps moving, time keeps going, change keeps happening, independent of our perceptions. And we get to leverage things because of our perceptions. And we encourage you, as the clock continues to tick and light continues to move, that you get to the place where you stop and say, I was born to experience greatness. I was born to be happy, healthy, and wealthy. That's my birthright. How do I get there efficiently if I'm not already manifesting it all?
Exactly. And that is why I'm super passionate about the opportunity to help so many families, just like my own, just like my Curvies, just like yours, regular schmegular people, to at least have an opportunity to get the right kind of coverage so that no family is left behind. Now, that's literally our mission statement. Literally our mission statement.
Can I share something else? I'm sorry.
No problem.
I mean, I shouldn't be sorry, but the other thing is the call to me from my niece regarding other loved ones was really, can you take care of a GoFundMe? I factually know that GoFundMe, most of the money that's put there never gets to people. It goes to pay for the structure, the infrastructure, the administrative structure. People don't get 100% of what's placed there. And yet when they have coverage, the insurance company doesn't say you have $1 million coverage, you get 800,000. No, someone dies who had coverage, the family gets $1 million. The company doesn't say, literally, you had $250,000 coverage, you only get 100,000. No, they get the entire 250,000. And the cost for many people is much lower than they can imagine. It's rare. Sometimes the older we get, of course, the cost is higher. It all depends upon what you want and need. So there's needs and there's wants. We want people to take care of those needs right away. And then we want people to experience their wants. And you may have to scale up. Like a number of us, it's not just Leah. My immediate coach and mentor, he and his wife have over 62 policies on themselves, on their children, their beautiful children, on their sisters, brothers, parents, and both sets of parents are still alive. That's extraordinary. On nieces and nephews, you can have as many policies as you want. I've got 20 something that covers some nieces and nephews. And my aim is by next year, everyone's covered. It's part of the reason why I'm in this business. Definitely that vision that was given to me, that's my responsibility for the rest of my life. That we're going to address in less than 15 years, because I don't know how long I'm going to be here. Maybe 95, maybe 100, maybe 105, who knows?
100 is the new 50.
Yeah. But I just wanted to emphasize, GoFundMe is not a good proxy to coverage, especially when you can use the cash that accumulates to sustain your families. And did you tell them, Leah, that they can grow their Index Universal Life? That's only one of the signature products we have. They can grow it where they can pull out retirement income.
I did, in fact. We went over that. I went kind of fast at the beginning. I said it my way. I would love if you could say it your way. But indeed, yes, your life insurance policies, I was telling them about the hybrids where you have living benefits available for you now. And so those are the types of products that I really enjoy helping clients find out about, because it is so freeing for their personal situations. You can speak to it. I would love for the people to hear it in your way.
I just did. I'm sure you were much more eloquent and maybe detailed. But the key thing is people need to understand that it's not just for the Warren Buffetts of the world, who has over 60% of his billions where. It's not just for the Elon Musk of the world, who took out hundreds of millions of dollars from his stock and placed it where? It is not just for the chief executives or other executives of corporations who choose not to have all of their income come in directly to their salary. They want that income to go where? Because they want to avoid tax implications on their gains. So where do they place it? Hundreds of thousands, millions of dollars over time. And it's not just for people who are ballers or were ballers who are now head coaches. University of Michigan, what's the brother's name? Well, he's not black, but he's a brother, he's a man. And where does he have millions of dollars accumulating? Is it, I can say his face, I can barely say his name. Jim Harborough? I'm mispronouncing his name. It is for all of us who qualify, and we can start where we can start and build our base quickly. But let me say the thing about the Index Universal Life, the IULs, they're designed to be maximum funded. And when people max fund, they can max fund and be done with their payments towards their accounts or policies within 5, 6, 10 years. So you keep it, and it should be structured so it lasts until you're 120 at least. If anyone gives you a policy and it's less than 120, no, it's temporary. And if it's less than 30 years, definitely it's temporary. It's okay if that's what you can get and that's important and you've had it for a while and it works for you. Just recognize that there's something powerful out there. And the sooner you find out about it and determine if you qualify and can leverage it, we recommend you do it. There's urgency. And I don't mean to exaggerate. It's not about exaggerating. It's also knowing you have more than just Social Security, which is nominal and may or may not be there, depending upon our age in the future. You may have more than a pension. And those of us who are fortunate to still have a pension, because pensions were eliminated to a great degree after the 70s.
And I mentioned how Yellow Freight just went under. All those pensions, those people worked there for decades, knew they were going to have a pension. That company went under, closed their doors. All those people's pensions are gone. So this is a way for you to have your personal retirement under your direct control, you guys. Amazing freedom in that.
Yeah.
So somebody said that MIMS was doing that. Where did they say? I saw, was it Satra mentioned that my good friend Mims was just trying to do that so the kids could have some money sooner. He wasn't sure if there was an insurance policy. That was very thoughtful. Hopefully she did have some insurance. However, and even on that tip, even if it's a horrible accident, tragedy, a lot of your insurance policies, those burial policies, pay out in 24 to 48 hours after you notify with the death certificate about, the passing of the insured. So you shouldn't have to wait too long, but that's why I also usually suggest clients get a separate burial policy from their larger savings policy, because the larger savings policies, they might take a minute to pay you your life insurance money, but your burial policies that are designed to help cover those immediate expenses that are missing from that insured's, contributions, those are usually can be paid in 24 to 48 hours to your loved ones. Again, tax-free lump sum benefits passing on to your loved ones so that we are able to have that carryover time people are just grieving right there. They need that carryover time until your larger life insurance savings policy is able to pay them.
Yeah, I want to add to that.
Okay.
Imagine doing what Leah recommends. Doing what she recommends. Oh, there's the echo.
Oh, I'm still off mute. Sorry.
Yeah. And thank you, Leah. Uh, Leveraging a burial plan uh, and literally having that company come in and establish everything that's needed for the funeral, take care of all the arrangements while the family's grieving. Imagine already having the location for the funeral, for the um, burying of the body, or if the body is to be cremated, having those services already addressed, those resources already addressed. Imagine having what we call a cloud account that has unlimited storage, literally, and that person who's passed, all of his or her or their pictures, videos, important documents that they want the family to have are in that cloud account. Well, there's a company that provide those services and more. Imagine having a software that you can leverage. You can go in and indicate, here's the location. My body may be in another country, and they'll bring the body back and ensure it gets to the location. And they have the white glove service that requires literally going through particular steps, typically costing $6,000. There's no added fee for that. Bringing the body back wherever it is on the planet, back to that location within these United States to go through the process of having the body prep for whatever the outcome is, and then having the services developed without the family thinking about any of it. It's all done for you. Well, that's what Leah is talking about. There's a service provider with whom we work that does excellent service in that regard. I just wanted to add that. And then you had a couple of notes that came up. Yes, seated, leverage it. The less I worry about the future as a result of financial freedom, the healthier I become and the longer I live. You got it. And the more I appreciate the financial foundation established through the application of all of this information. You got it. Yeah. Peace of mind. Peace of mind. Peace of mind. Peace of mind. I can't emphasize enough the power of what we get to do for ourselves. And then we get to do for others. Peace of mind. And to go back to that niece who called me, she and her entire family, the 4 kids, they're all covered. We made certain of it. Her siblings, same thing. And my nephew, her brother, with his children, they're covered. The point is, brothers, sisters covered. Ensuring that they're all covered. Even if they can't afford it, they'll have me to help expedite that. That's the power of being able to be in this space too. Able to bring in enough income where even if I have a loved one who cannot afford it, that doesn't stop them from getting coverage. And then if they want to choose to be part of this effort, they can build their base where they can pay it forward themselves. That's the brilliant of what we get to do. And the platform that Leah conveyed earlier, imagine literally building your business. And a number of you have built businesses, so you can imagine this well. And whether your business is doing extremely well or has just got to a place where it's generating revenue, or you're just building it. Literally, you're investing a lot of money in it. I invested 200 and a little bit more than 275,000 in my business, Signature Solutions Corporate Results, prior to even knowing that this whole platform existed, prior to even being aware that I might be in financial services. I had been in higher education for almost 40 years. I'd been a researcher at Cal, at UC Berkeley, for those who don't know what Cal stands for in brief. I've been at Stanford. I've been in the community college system in 3 different districts, including in Miami. I've been at Cal State University, Sonoma, UC Riverside. I've been a number of places, and I was so fortunate to be able to work with people and ensure that at least 100,000 people I got to work with directly. But what did we do? We had an infrastructure that we were part of, and we got to inform it in terms of policies and other things. And then when I retired, so-called retired, thought that I couldn't believe I was retiring so early. And I could. That was remarkable. But then I realized, oh my God, I feel like I'm a slacker. And people kept asking for my services, so I monetized it with the business. I invested $275,000, and I would do it again. Of course, I recovered it within a couple of years. But the bottom line is this. When I chose to come onto this platform, I had no idea. Someone says, oh, can you help me? I said, sure. They said, but it's going to be 125,000. So I thought, no, 100,000, because they said 100. I said, 100,000? No. I've already done, I've invested 275,000 in my business. I don't need to do that. They're like, no, $100. I'm like, what? Now it's $125. And then when I learned what was the infrastructure, was like, I only have to pay $100 to help you and be on this infrastructure. What do you mean? I know what it means to build, and it's nothing as massive as this. So well in excess of $100 million is part of this overall ecosystem that we get to leverage, and we don't have to build. Incredible. So I just wanted to speak to that for those of you who really enjoy helping people. You may not have a lot of time, but you definitely want to help people, refer them to us. We want you to be compensated as part of that. Sign up. For those of you who need more assets, more money coming in, cash on hand to take care of basics, let alone what you want, because both are important. Basic needs and wants. You get to live that way. We encourage you to sign up. And I'm going to have to sign off because you're right. I've got a series of meetings this afternoon, but it's been my honor to compliment you, and I'm so proud of you, Leah. And thank you for being here with her, Corey.
Anytime.
Yeah, this has been so incredible, Dr. Elnora. I totally appreciate you for coming through and sharing your expertise. I don't know if anybody doesn't show up or anything like that. You're free to come back because, like I said, it's a marathon. So we'll be here for a long time. I was planning on being on for at least 5 hours today. So we're coming up to our last hour. Because we're going into hour 4, making it almost our last hour of 5. And yeah, just definitely do this QR code right here. Get a complimentary appointment. Also, through this QR code, you can see how to become one of our business partners. You'll be able to meet with Dr. Elnora and I. Oh, you know what? They totally wanted to ask you some questions. Darn, you got to go though. Oh, somebody had a specific question. You know what, Zara?
Pull up. Very quick.
Okay. So here we go. Here, Zara and Satra. Here you go. Hurry up. But let me see. She had a question about the mom. Okay. Oh, no, that's not it. Oh, here it is. Here's one question. You guys can use that link to come on up. And we'll take 3 questions if you hurry. Can you have a policy on a family member without knowledge of their signature or social security number?
Okay. So this is important. You could have a policy on a child under the age of 15. Without a doubt, you do have to have their social security number. Otherwise, it could be anyone. So that's important. The next thing is anyone over the age of 15, I believe. It's either 15 or 16. I think 15 must be aware of the policy and sign the policy. And for most companies, if not all of them. And the important thing is you want the family member to know that you have a policy on them. It's to their advantage to know. And some people will say, and we have clients who say, I'm trying to help my father or my mother or my sister, and they just are determined to say no. And I'm paying for it and I'll take care of it. I know what they're experiencing. I've experienced it. And so the point is to have them come in and be part of a session with us. So it's not just you and your thoughtfulness about wanting to ensure they have coverage. It's about you with them. And it may take a while, because this one gentleman, a brother of mine referred this gentleman, he was like gung-ho, going to do it for his sister. He's already covered his 2 daughters, not sister, daughters, but he wanted to cover his grandchildren. But he has to have his daughters be aware of that. I mean, that's the reasonable thing to do, right? The moment they learned, they were like, nope, we don't need it. We don't need it. They don't need it. And so it took a while. And then he's circling back for us to meet with both daughters. They have some strong impressions about it, and they didn't like their experience, so they didn't want their grandchildren to experience. I don't know what those experiences were, or what their takeaway from the experiences were. So we're going to meet with them. I'm going to ask them to share to the degree that they want to. As important, we're going to share what we do so that they can compare and make their own decision. And most importantly, yes, anyone you're going to do a policy on, if they're not your child and they're not under 15, you definitely want to have them be aware and be informed and be part of the process, let alone you definitely have to have the Social Security number and their signature.
I just want to add on, piggyback on that real fast. Part of the reason why you would want their input and everything is because if something happens to you, you're making this huge investment. They are going to have to be in the position to take that over. So definitely consider that for sure. Okay. Zara came up to ask you the question personally. Go ahead, Zara. Thanks for coming up, being a part of the stream today. What's your insurance question?
Hello, can you hear me?
Yes.
Okay. My question is, I know you mentioned very briefly about different faiths and things like that, but I just wanted to know when there's a specific legislation or rules religiously, how do you go about dealing with that? For instance, I know with Islamic law that there's a specific portion that is already predetermined for inheritance. And if you want someone to have something outside of that, it has to be gifted in a special way. So I just wanted to know how you dealt with that in the past, if you have, because like, for instance, like spouses, children, even siblings all have a specific portion that they are owed in an inheritance.
Yeah. I have not dealt with that directly. My clients deal with that directly. So they know the particulars that are unique to them and to their faith, their religion. And so I guard against getting involved at that level. They inform me, and then they indicate what they want and how they want it designed. Other than that, they may have an attorney that's helpful, and we may have an attorney on hand who's sufficiently knowledgeable. But when it comes to those technical legal aspects, religious priorities and parameters, we honor that they exist, but we do not inform that. Is that helpful?
Yes, I just was curious because I know some people are very skeptical to even set up things because they feel like it's a contradiction to the religious laws, and so I just was curious. But
yeah, and it includes some religions have issues with interest, gaining interest.
Islam does too.
So yes, and so we just honor where people are at and their particular faiths. And so if they come and say, we want to understand this, and we cover something that their faith says stay away from, We just cover it. We're educating. And I have a number of instances, including family members, but a number of instances where people have particular faiths where they're not to delve in interest at all. They've gone to their leader, I don't even know the right way to term it, but
Religious center.
their religious center or religious leader, and have gotten permission. And I don't know what that means. So I just honor where the folks are at. When they come back and say, okay, I definitely want this, and here's how I want it structured, that's what we do. But we make it a point to say, here's the way to structure it to maximize the best returns for you. So it's our obligation to give accurate information that advantages the client. The client gets to say, I'm going to do this initially, or I'm going to do this at all, right?
Okay,
It's an important question. It's very important because religions are very diverse, and there are certain parameters, and it's our responsibility just to honor people. No
I
judgment.
really enjoyed listening to you and everything I'm learning. I definitely will book an appointment or hopefully multiple appointments.
Awesome. It's our honor.
Thanks for coming up, Zara. I appreciate your coming through and having such an insightful question. I personally just learned something new. I've never had a Islamic person for a client. Had no idea that that might be something we need to consider. Let me reiterate what Dr. Elnora said, that it's completely about our clients who they designate as beneficiaries according to their wishes that will put on their policies, and that will go to the company, and then they'll make sure it's carried out in that way. Aside from that, it sounds like the trust might be something to add in that regard, where you can make sure that the amounts of money get doled out according to those types of religious wishes. So that's another something. One more question here. We have Satra says her mom had policies on her brother years ago, unaware, had to tell him that it was in their name to cash the policy once the policy matured, but both brothers were still alive. Interesting. Yeah, so maybe she got it on her brothers when they were younger and didn't need to sign off on anything. And so she was able to keep those policies paid in a way that complemented this situation. But I know that just last year I had to go back on some juvenile policies, and we were required to get signatures on juvenile policies because they were under 21 but over 16. And so I think that was the new little window of that person needs to know they have a policy. So that is very true. That's why you should get the $1 million babies. So thank you. Awesome. Okay, awesome. So if we don't have any more questions, I want to make sure that, we just thank you again, Dr. Elnora, for coming through. Use this QR code. You'll be able to meet with her and I about any of this. We're going to keep it moving. Dr. Elnora, I'm going to go ahead and again, thank you for your expertise and your time today, and for sharing how to be financially free during this marathon. Thanks again, Dr. Elnora.
My honor. Be well, be prosperous. Know that you were born to be great and to be as wealthy as you choose. Be well.
Talk to you. You're on mute.
There, I was waiting for her to leave the studio because I think somebody said it was her mic picking my mic up. That was a really powerful mic. So I'm so glad one of them. She got to come up. Is there echo still?
Yeah,
just a little. Really? It must be the mic on this MacBook. Anyway, I hope you guys are getting a lot out of this life insurance drive today, answering some questions for you guys. We were, right on, Satra. Thank you. Yeah. And it's complimentary. So we will be there or be square, and we'll be prepared to answer all your questions. Hi, CD. That's Mama Curves, you guys.
Hey.
Let me see. I was going to put this back up real quick because this literally is our mission. No family left behind. That's why I decided to do this today. I'm on a mission. When I found out these products were available for people who qualified, and know that a lot of people are getting other products that aren't this complementary to goals. Just imagine being family A. So, family A is middle America. I don't know why people just disregard poverty America, but they don't seem to make it to a list. So we'll start with the middle, okay? And in family A, they have $100,000 on their job or less. They have a job. They have a 401k plan. They have term life insurance, probably because they have a job that has insurance. So they were like, oh, let me just go get this little bit of insurance over here. They rent a home. They put money in the bank where it gets that 1% from that chart we went over earlier. They indulge in credit card debt. They have minimum tax advantages, meaning they're paying Uncle Sam up the wazoo. They don't have an advisor. They don't have a plan. They're just kind of going through the motions based off of limited financial literacy. And that's a majority of the population, you guys. A majority. Okay. We're trying to get family A to family B's position where you're making $250,000 or more, where you're a business owner, where you have your money in indexed accounts, which we've already identified as guaranteed return accounts. Okay. There's permanent life insurance. So that means it's not going to term out or terminate. They're homeowners. So they have several diversified streams of assets. Okay. They have, like I said, a diversified portfolio. I don't ever tell any of my clients to put it all here. I, like Dr. Heavenly, am of the mind that you need 7-8 streams of income, 7-8 streams to diversify, growing your income, being able to access your income, okay, and being able to pass on that generational wealth. If you indulge in stocks, that's one. CDs is one. Traditional savings is one. IULs is one. Whole life policy that's just for burial. That's also a whole life policy, growing you some cash in there. So there's all these different opportunities to be diversified in your growing of assets, along with being debt free, as opposed to having credit card debt at these astronomical interest rates that I'm paying right now. Because right now, you guys, I'm family A. I'm with y'all. I'm family A on my way to family B. Okay. I'm putting us in a position to change our family dynamic from family A to family B through this platform that I'm sharing with you. And then we also have maximized tax advantages over here. And we have a financial professional. I'm licensed. And it seems to be only a small percent of the population. They were saying it was 1%. We're willing to believe it's about 5% now. It's about 5%. But in this universe, you guys, you know what I'm always saying here on Larger Curves, there's enough to go around. Get some. Open your mind up to the limitless possibilities of there being enough to go around, and then go get it, y'all. Okay? Okay. So most people don't plan to fail. They just fail to plan. So part of what this QR code in the corner is going to help get you is a plan in motion, is the ideas of a little plan. Okay? Fail to plan or plan to fail. The choice is up to you. I read that most millionaires have a minimum, yes, diversification. And like Dr. Elnora mentioned, while Warren Buffett has 60% of his portfolio in IULs specifically, he's still diversified with 6 other places to do his money, you guys. Okay? So yes, the magic number 7. Let me answer this question real quick. I didn't want to confuse anybody with this statement when I said I usually have clients get a burial or funeral policy a little smaller to cover those initial burial costs through our funeral concierge service that Dr. Elnora mentioned, where while you're alive, once you get the policy, you meet with the concierge, you tell them what you want. Do you want to be buried, cremated? Do you want a big funeral? Do you want it at a funeral home? Do you want it like, so they really help you get to that hard conversation. And it's not wishing anything bad. It's just preparation to make sure that everything is taken care of for your loved ones so they don't have to stress and worry about, are they doing it right? Was this your wishes? You know what I mean? But those policies are not separate from life insurance. They are an additional form of life insurance. You see what I'm saying? So a burial insurance is its separate policy of life insurance. And what I suggest and also demonstrate for my portfolio is we all have burial policies that are whole life growing money. Should any of us pass, that money is going to be discharged in 24 to 48 hours according to the wishes of our concierge questionnaire. And then we also have the bigger policies that I was talking about, the IULs, or alternate life insurance policy that has a much bigger amount that might take some more time to pay out, up to 14 days sometimes. But those bigger policies, since they take 24 hours, you can't have the people sitting around for 24 hours. That's why it's important to have a separate life insurance policy just for your burial, so that it frees up any money, so that house note can get paid, so the burial can get scheduled. Whatever else you need to do right then is what this burial insurance policy would do. But it's not a separate form of life. It's not separate from life insurance. It's an additional life insurance policy. A lot of burial policies you can get for like under $50 a month. My policy is only $39.10 a month. So figure that, depending on when you get it, what you qualify for, and all those things. But that money will definitely be freed up for your loved ones to have all that taken care of. And then anything that isn't spent on the funeral is then returned to your, that's not allocated to the funeral process, is then paid to your beneficiaries also. Okay, so if you get a $50,000 burial policy, you don't have to have a $50,000 funeral. You can allocate $7,000 of that $50,000 to have you cremated and scattered on the ashes of the ocean and under the Bay Bridge or something like that, and then give the other $43,000 to your beneficiaries. There, you can do whatever you want. This is all under your control. Okay, you guys? Let me see. Was there any? I appreciated that comment. Oh, wow. She was an innocent bystander. Whoa. Due to the investigation. Whoa. That's crazy. Yeah. So, okay. There are some cases where life insurance won't pay out, you guys. So like if you are in the middle of robbing a bank and get unalived, they won't pay you during the commission of a crime, even if you paid every premium and were healthy and everything. You need to also be sure you check on those things. There's like only 8 reasons that it wouldn't pay. So you have to be careful to not do any of those 8 reasons. But most people know what those reasons are and aren't engaging in criminal activity anyway. So you should get it. Allow your confidence to outweigh your doubts. Yes. Yes, that's the thing with all of this. In life, what you're confident about, it gives you drive. It gives you a little energy to talk about it, Let that energy outweigh the doubts, the unknown. The unknown is just unknown. Go know it and then decide if it's something that's still doubt and fear. You see what I'm saying? Let me see. Zaza said also check their net worth in the morning and at night. Yes. Okay. Another thing millionaires do, because I've been hanging out with a few, is they check in on their goals and dreams daily, you guys. And on this platform, now that I'm part of this platform, I'm doing what my millionaire mentor is having me do. You know what I mean? Eric, Millionaire Maker Olson, he reads his goals every day. Every morning we have an hour of power. That's part of my awesome mindset, is that every morning I have my hour of power where I edify my dreams. I speak life into myself and into my day and into my business. I affirm myself every morning. I read my dreams and goals out loud with passion, daily and often. And all of those things, if you look, a lot of those millionaires do the same thing. They have these little things that they do to help them stay in the state of mind that's needed to maintain that level of wealth. You know what I mean? Because you can't have an unlimited mindsets. You really can't. You really have to just think outside the box. I don't know what those 8 things are, but I'm not a criminal. Right, exactly. But you're not a criminal, and they mostly have to do with criminal stuff. So, oh yeah, the other one is obviously, so if you, the S, if you did your own, unalived your own self, they're probably not going to pay you. If you, if you got drafted and had to go to war and died during war, they wouldn't pay you. Is the 8 items on page 3? Oh, no. So that would have been up front. Like, I know on the policies I do, we go over all of that. Like, there's a section where you go over the reasons why it won't pay. So does anybody have their policy out? Speaking to this question right here, page 3 of the policy. So on page 3 of the policy, specifically a whole life policy, that's where you're going to find out what the cash situation is that you're growing, when it'll pay out, how much is accumulating, at what intervals it's accumulating, and things like that. So let me see if I can show you real quick. A life insurance policy, page 3. It's usually all the forms are according to that company. Most policies, it's on page 3. Let's see. Let's look. Yeah, schedule of insurance. Let's do this. I'm going to try to show it to you here. So thanks again for coming into Larger Curves. We're coming up on our 5th hour of this live virtual marathon for my insurance drive today. This is Life Insurance Awareness Month. So I will be doing this again and again and again and again and again. So if anybody that you know may need to come through and find out about their life insurance policy or anything like that, then we will be able to go over it. So here, I just found one. Let me share this on the screen. Stop that screen share. Present this screen share. I hope you guys are doing fantastic. Share the video. Smash the buttons. I did pop out and come back in. And at one time we had 9 people in here and only 6 likes. I don't know if that changed, but come on, like this video. It really helps me stay in the algorithm, and hopefully it'll help push my next insurance drive later this week up to the front so that we are able to, nope, not that one, block. Oh, okay. So I have to split the screen. Lord have mercy. There we go. Okay, now I can share it because I split it. Technological advances. Thank God that I'm able to do this presentation this way. Let's see. Open that. Okay. Sorry, you guys. 7 planets are in retrograde right now. So if your life is going a little crazy, that's why. Oh, right on. Thank you. I appreciate that. So now we're going to present, share a screen. There we go. How to read your insurance policy, allow. Okay. It should come up any minute now. And so this is what a typical page 3 of your policy looks like. On this page, it has the policy year, the age that you are during that policy year, any guaranteed premiums that you're supposed to be paying, what the current premium is. And because this is a traditional whole life policy, you'll see that the premiums in these columns are both the same because the terms do not change. The premium does not change. Remember, I told you that earlier. Your whole life policy terms don't change, premium doesn't change. So this person paid $433 a month so that they could grow this cash the way they wanted to. Okay, so now these guaranteed cash values. This cash value is accumulated based off of the amount of premium you're paying. So a portion of it is going to your life insurance, death benefits, and a portion of it is going to your cash accumulation. This person has a $50,000 death benefit, okay? And that's going to pay out year 1. Should this person drop and everything got through underwriting and there's no waiting period in force for that particular policy, that person's beneficiaries can be set to receive this $52,000 immediately. What we're going to look at is this guaranteed cash value, though, and this is the cash that's growing, okay? So these values over here are non-guaranteed. We're going to stick with this one. So this policy in year 10 had accumulated to $2,898 worth of cash. So that's growing at a modest about 4%. It's looking like, because it's not super high. I don't deal in 4% policies typically. Any illustration that Dr. Elnora and I run for you is going to typically, like I said, start around 6%, but traditionally has returned no less than 12 to 14% and even up to 44%. So this is a modest accumulation. And you can see the number continue to go up from 2,800 to 3,200 to 3,600, 4,100, 4,500, 4,900. So now these are cash values that you can borrow from. This isn't a policy. I'm just showing you guys where to look on your policy to see the things, okay? This isn't our policy. This is probably a policy that you might have. So the policy year, so you can expect on year 22 of this policy, this person's age will be 47, and they'll have $8,000 guaranteed cash value with a death benefit it's grown now to almost $60,000. You see that? And then we keep on edging along. And let's look at when this person's 50. Excellent. They have a nice little nest egg of, oops, darn it. Let me see. Sorry, my bad. They have a nice little nest egg when they're 50 here of $30,000. That's excellent. Now, this also is a form of a family bank because this person will be able to borrow any portion of this $30,000 from their self to their self. Okay. So they'll be able to call the insurance company and say, hey, you know what? Oh my gosh, I want to take a trip around the world. It's going to cost me $15,000. Can I have $15,000 of my $30,000? The insurance company will be like, sure, whatever, and release the funds to that person. It doesn't take long. Again, it's in a short turnaround time for your cash withdrawal requests. So it's pretty liquid. Okay. That would leave them with, in this particular case, if they took $15,000 out, that would leave them with the cash value now of $15,000 to compound again for that 4%. If the person dies before paying back that $15,000, their now $87,000 death benefit would have that $15,000 deducted, less any insurance, less any interest, because you still owe yourself interest in your personal bank. That interest is still around the same 4% annually, so it's better than any credit card. They would have that deducted from this $87,000, and then that would get paid out to, the difference would be paid out to their beneficiaries in a tax-free lump sum payment. Also on this page 3, you can see when the policy ages out. So that's, this person that made it to 100. So like Dr. Elnora was saying, our policies, we started, we have access to make your policy up to 121 at least. They're currently looking at extending that. A lot of people are living longer and wanting to live longer because they found a way to have more money to enjoy it. So this policy aged out 75 years in. The person was 100 years old. They finally accumulated $50,000 worth of cash. They now have $139,000 death benefit. And that's at a modest growth. Okay. So if you have a page 3 of your policy and you don't understand it or want to delve deeper into it, I would love to be able to. Corey could also love to be able to do this. We could do a policy review where for free, we'll let you know what your policy is looking like. Okay. Because we would hate to have you get to the end and think that you had something that you didn't and become one of the horror stories of insurance. Okay. We already mentioned that some insurance companies will only sell you term insurance. But that just even sounds weird for me to say that. I've just looked off into space, because why would you want something? Why would you pay into something for 30 years and then not have it have earned you any cash? Was that super duper smart? No, just be financially literate, get financially free. Let's see. Now, I do want to show you guys another something. Let me go here. Oh, we'll go over here. Okay. Let me see. Can I show this? I'm going to show you an example of the $1 Million Baby plan. I don't know if you guys will be able to hear it though. I hope you'll be able to hear it. Let me take this off. Just a second. Thanks for coming in. Smash the button, share the video. We are in our 4th hour of this insurance drive. Thanks again for coming through. Let me, oh, it already started. Where's the sound? Oh, I muted this. Stop that screen share. Present this screen share. Share this screen. Share this screen. Allow that screen. $1 Million Baby. Allow. You guys can't hear it, huh? Can you hear that, Corey?
I heard something go.
Yeah, it's making. Okay, maybe if I mute this. No, but that's the one in the stream. Dang. Sorry, you guys. Just a second. Learn as I go. Learn as I flow. Isn't learning exciting? I totally love learning. Okay, now this is turned up. And if I press this. Come on, play already. There we go.
Feedback City.
Can you hear it now?
Feedback City.
$5 5 years.
Okay. It's still there. Is that better? Can you hear me now?
You're still
feedbacking.
Even right this second. That is so strange. I have no idea what is going on. So basically, this is an example of $1 Million Baby illustration. Please bear with my technical difficulties and whatever feedback you may be experiencing. I can't hear any distortion or anything. This video is going through how when you get a policy on a young, healthy baby, pay $28,000 into that policy. By the time that child is older, they would have up to $1 million. That's why it's called $1 Million Baby policy. So this line right here is showing that the premium is $100 a month initially. So it was structured at $100 a month ever since the baby was born until the baby is 4. And then once the baby is 4, the person decided to kick up their investment and start investing, start saving $1,800 in premiums a year. They did that for 2 years, and then they did the remaining years at $200 a month premiums, equaling $2,400 a year. Okay, so the total premiums paid in on this policy was a mere $28,000. Okay, now if anything happens to that child, there's an automatic death benefit that's going to be paid out of $250,000. Okay, in the meantime, because we're not looking at the death benefit, we're accumulating cash. We're going to keep looking, and we're going to come over here to this cash value column and see that for the $28,000 that was paid, this person has cash on hand at $26,000 by the time they're 20, along with the death benefit of $251,000. They're saying that they wanted to take $48,000 to pay for college. They just took it from this policy. They didn't. Oh, yeah. And the other thing about IULs, you guys, let me tell you this real quick. I hope you can hear me. The other thing about IULs is that for college applications, it doesn't count. So, you know, when you go to college applications, your parents are like, oh, we make too much money for you to get a scholarship. IULs don't count as that type of asset to go against the college application. Side note, you can also use it to pay for your college education. So let's make it big again. Then we come down here, and they were able to continue to grow the money because it's indexed. This is an index, so it's guaranteed, locked in. Remember those little locks? So even though they took money out of their cash, their policy was still compounding based off of that locked in rate. So they take these amounts out here, and you see it didn't affect this compound here. And so the money's still growing, still growing, still growing. Look at this cash. It's still accumulating, still accumulating. And then you get over here, and when they get to be about 30, they decide, oh, I want a down payment for a home. So they take that money out of their life insurance policy, and they're able to continue to grow it as if they never took the $25,000 out. It's fascinating. I'm going to let the video play a little more, and then we're going to hear a little more. Okay, so he's demonstrating right here how the person continued to take the money out, And this is the outcome. They took out over some time $48,000 for college expenses, $25,000 for mortgage on their house. They upped it when they got older to got $100,000 for a vacation condo. Now, the total benefit of the $28,000 investment that was only paid to age 14, the benefit this person ends up realizing from their $1 million baby plan is literally $3 million in benefits from a $28,000 investment. And remember, Dr. Eleonora and I both said that you can max fund these, you can front load these. That means pay them up sooner, get it all taken care of, so it's just only compounding for you. There's all kinds of ways to do this. Let me keep it playing. Sorry about that feedback, you guys. I'll figure it out for my next live. This is the final screen. So the person paid in the $28,800 from the time the baby was born to age 14. No more premiums were paid after that. Okay? I bet in somebody's 401k right now they have $28,000 they could put on a baby policy for their baby and set their baby up right now today for this type of thing. Okay, let me keep going. Now the total cash received, because I kind of skipped over the part where not only was the person taking out over $178,000 for various cash withdrawals, but then they also set it up in order to pay themselves a life benefit while after they got 65. Then when they passed on at age 89, their beneficiaries still received a lump sum tax-free benefit of this $1.6 million. So the total benefits from $28,000 investment was $5,266,708 of benefits for a $28,000 investment on IUL. Now, I'm going to stop it there because this thing is freaking blowing my mind. Let me stop that share. There we go. Stop that share. Come back up here. Wasn't that fascinating? So those are the $1 million baby plans. And like I said, I just found out about these plans. I just got access to these plans. My kids aren't babies, so we're playing a little catch up. The premium is a little higher, but we're definitely putting us in the position to where my sons, my two black sons, are going to have access to $1 million by the time there's 40 still. That's the way I'm structuring my stuff. You can structure your stuff any way you want to. Okay? We're talking about life insurance policies that are under your direct control, that you control, that you grow according to your dreams and wishes. As Dr. Eleonora and I reiterate often, it's not about us, it's about you. And if you already have 8511 insurance policies and really don't need an extra one, we're not gonna do a hard sell on you. You don't need it. You've got enough coverage. We don't have to indulge, you know? However, if you'd like to continue your coverage to grow it astronomically, so that maybe like Kobe Bryant, you can put yourself in a position to have $30 million paid out as your death benefit. You can do that. Okay. Oh, look, speak with your girl, Marcella came in. Right on. Thanks for coming through. I wanted to thank Marcella. So I was over visiting Marcella's house the other day. She's such a gracious host. She's out here in these YouTube streets. And she was like, oh, Larger, when are you going to do that again? So thanks for coming through. And then she even contacted me after. She was like, oh, send me this so I could post it on my page. So I totally appreciate you. There is enough to go around. Teamwork makes the dream work. And it's literally about putting our people in a position of power. Okay. Because what we all will always say is that when it's not about black or white, it's about what? Green. Okay. And this will get you your green. Yeah, smash that like button. Oh, yes, please. Definitely. Please. I just had an expert on. If you just got here, Marcella, I just had my mentor, Dr. Elnora Webb, on, and she spent a good hour with us. Yeah, I'm confused, but I have to go. Ask you more questions. Yay. Okay. Yes, definitely. Definitely. Here, I'm going to put my my email for the life insurance stuff. Here, let me put it right here. So if you want to email me any confidential questions, in the meantime, then we can do it that way. So there's my email for all things life insurance. You can tell that large is my handle, obviously, because larger curves, larger life, larger homes. I'm also a licensed real estate agent. That's why I love the idea of marrying asset protection and real estate. Thank you. I'm a legacy liaison. And yeah, this was, yes. So awesome. Yeah, we totally need this. And I know you have your stuff together, Marcella, but the QR code that is in the corner over there is a direct Calendly link for people to engage us about policy reviews, financial reviews, to book an appointment, to do whatever thing. Yes, exactly. And IUL is the way to get to that legacy and create generational wealth. Look, you guys, there's enough to go around. It's never too late. We all have an opportunity. Right on. We all have an opportunity to play. I said earlier, this is affirmative action, you guys. This is affirmative action. What I provide for my clients is a form of affirmative action because it's going to remove you from the abuse of poverty, put you in control of your financial future, and allow you to leave a generational legacy for your family. Okay? That's why I got into this. That's why I do this. That's why I'm on a crusade to leave no family behind and to educate the masses. I feel like financial education, it's a disservice to be teaching my kids Common Core math and not financial education. That's why I homeschool. But I feel like financial education should be in schools too. But we all know they're not really trying to educate us there. They're just trying to keep us someplace to get us used to sitting at a desk so we don't think about things that could free us, like these IULs. Okay? Oh, right on. And be on replay now for the day. Oh, right on. Okay, thank you. I appreciate that. Right on. Yeah, we got to get the word out. I did just show the $1 Million Baby. That's also infinite banking or family banking you might have heard of. Or if you ever saw my video about do what the Rockefellers do, that's an infinite type of banking where you're your own family bank. We went over long-term care. It may be required very soon for you to have some type of long-term care. That's an insurance for you to be able to have assisted living kind of thing. What else did we talk about? Check page 3 of your policies. Okay. What else did we talk about? diversifying your incomes and diversifying your portfolio so that nothing is tied up in one place. Don't put all your eggs in one basket, okay? Because if that basket drops, all your eggs might crack, okay? What else did we talk about? Not leaving any family behind. That's my mission in life. Part of this drive is not only making sure that the education is out there, but I'm making myself available to help no less than 100 families this month get financially in a position to carry out their dreams. Yes. Yes, exactly. Exactly. And that's what we want. That's what we want. That's the generational legacy, is to leave behind more, right, than what you have. Don't we all want our kids to have more than we have? Don't we all want our kids to experience a less stressful life than we did? I mean, living paycheck to paycheck is not a fun existence. Okay? We need to start instilling in our children the abundance. Okay? We need to start instilling in our children the investment into yourself is the most important investment. We need to instill in our children that health is wealth, because without your health, you can't get some of these products. You have to qualify, and it's based on your health, you guys. Luckily, it's not based off your skin color, but it's based off your health. Okay? So that means this is the affirmative action. There's no stopping us here. There's not even a box on my applications for race. This is a level playing field. If you qualify, you can get in. If you pay, once you're qualified, you can maintain it and get to your financial goals. Okay? It's super duper important for me to reiterate that over and over and over again. And people are always like, oh, she's always talking about that stuff. Yes. Do you have yours yet? Have you taken care of it? Or is it something else that you've been meaning to do for a long time? Before we go, let me just draw up. I wanted to talk specifically about why it's so important for single mothers to have this. Because a lot of single moms put it off. I know for a fact a lot of moms might even put it off, but specifically single moms. I don't want them putting it off. Not one more second, one more moment. Okay? Because who's going to take care of these kids? Right? Who's going to provide the house for your children? Who's going to maintain that level of life, right? So let me go here. List 20 reasons why single moms need life insurance, including how an IUL can benefit her. So I jotted this stuff down earlier. Let's see. Life insurance can be especially important for single mothers to provide financial security and protect their children's future. Here are 20 reasons why a single mom needs life insurance, along with how an index universal life policy can benefit her. Okay? Income replacement. Number one reason, life insurance can replace the income of a single mother in case of her untimely death, ensuring her children have financial support. Childcare expenses. Okay? Childcare expenses is number two. It can cover the cost of childcare expenses, allowing the responsible guardian to care for the child. Educational costs. Life insurance can fund educational expenses, including college, or to ensure that they have a quality access to education. As we made clear earlier, even if you set aside money for college, in your IUL, that college money can really just go towards the child's life. If they want to go travel the world and be a vlogger, do a travel vlog and have it funded by their college money from your IUL, that can happen. Mortgage or rent. It can help pay off the house the children are left with, or help pay the rent for X number of years, depending on how you structured it. Or pay off the mortgage entirely so that they don't have to worry about losing the house. Debt settlement. Life insurance can be used to pay off any outstanding debts, like credit cards, loans, or medical bills. Of course, we already went over the funeral expenses, estate taxes, can provide liquidity to cover any estate taxes, lessening the need to sell off any valuable assets. You can use your life insurance policy as collateral on cosign on a loan. If a single mom has cosign loans for her children, the life insurance can ensure that those debts are paid off. Child support life insurance can be a safety net for ensuring the continuation of child support payments if the non-custodial parent passes away. Estate equalization, it can help equalize inheritance among multiple children or beneficiaries. Guardianship, life insurance can provide funds to choose guardians and to cover the costs of raising those children. But again, we strongly suggest that you have that tied up in a trust somehow so that your wishes of who is the guardian of your child are carried out. Business ownership, life insurance policies. If a single mom owns a business, life insurance can fund the buy-sell agreement. It can be used for charity. We already mentioned it can be used for retirement, tax-free income, principal protection, guaranteed minimum interest rate of an IUL, ensuring steady cash growth. And there's no maximum age for contribution. So people love talking about, oh, I have a Roth. It's better than an IUL, but your Roth has a cap on how much you can invest into your Roth. There's a maximum, you guys. Check it out. Do your own research. There's a maximum on those Roths, okay? And the Roths are usually tied to the S&P 500 in a way where you still have a gain or loss that's not guaranteed. Okay? And finally, the 20th reason that I want to share today with why it's important for single parents, specifically moms, to have a IUL and some life insurance is the legacy that an IUL can be used for in passing wealth on to their heirs in a tax-effective way. Okay, we're talking about security, flexibility, and the number one thing that's important to a lot of us women, our peace of mind. We're not offered a lot of peace in this world. However, we can create peace by doing these things and having a life insurance policy. Okay. Let's see. Somebody asked something earlier. Here it is. Is that the check their net worth? Yeah. Oh, no. Okay. I thought somebody asked a question. My bad. My bad. Does anybody have any questions? I already dropped the link once, but does anybody want to come up before we end our 5-hour portion of the live? And then you see, I've been sitting here for 5 hours. My mouth is dry. I haven't used the potty. I'm going to have to take an intermission, and I'll come back for some more of my live marathon today and do some more because we're on a mission to get these families covered and to financially educate the people. Okay. So like I said, I'm here to answer your questions today, and be sure to come back here. It's coming up on our 5th hour. So yeah, we're going to end this at 3, and I'm going to take a couple-hour break, use the potty, check on the kids, make sure they eaten, get my meal replacement shake, and go from there. Okay. So definitely, I hope you guys have your bell hit to all so that you can get notified when I come back live, and be sure to share it. If you have anybody who missed this awesome information this morning and you think they needed it, then they can come back. Also, you can just replay this video, share this video, and don't forget, do not forget to use this QR code right here to get on my schedule to meet with Dr. Elnora and I, so that we can help you guys get started on your financial journey. Corey's also part of our team, and so she might be in one of those meetings. Corey, do you have anything to add during this last 5 minutes? I have to use the bathroom so bad.
No,
My bladder's good.
just know that it's important to have coverage.
Yes, and also people, the whole thing about getting children insured as soon as possible is because if your child gets diagnosed with something as a child, they can be uninsurable as an adult. Did you know that? So you want to be able to put your child in a position of at least having something, right? So I would get on this $1 million baby plan, because even if you become uninsurable later, you are insurable at the time of your application. Therefore, that insurance policy will continue. However, if they get diagnosed with did you know if your kid gets diagnosed with asthma, they can become uninsurable? If your child gets diagnosed with ADHD, they can become uninsurable. Isn't that crazy? And those are things that are just like regular schmegular things in our life today, you know, and it's making a whole generation of people uninsurable. So the sooner the better. If you know anybody who just had a baby, if you know anybody who just got married, if you know anybody who just bought a house, tell them to come back here at 3:00 so that I can show up. No, I mean it's going to be 3, 4, 5. So around 5:00, I'll come back. Tell them to come back when the bell gets notified so that I can reiterate to them and answer any questions that they might have about why it's so important for those 3 life events to have insurance specifically too. Okay. So we're about to wrap it up. I would totally appreciate you guys for coming, smashing my buttons, ringing my bell. I appreciate you guys so much. Leave your comments and share the video. And you know what? I'll see you guys in a couple hours for the continuation of my Life Insurance Awareness Month Life Insurance Drive virtual marathon that started at 10 today. Okay. Ooh, I got to use the bathroom on my eyeballs yellow. Ooh, I got to go. I love you guys. Don't forget, you're worth it. There's enough to go around, and get started today instead of put it off another day. Don't procrastinate. Don't dawdle. Life is urgent, you guys. Live it that way. Thanks for coming through, Corey. I love you,
No
sis.
problem. Love you more.
Okay, I'll talk to you soon, everybody. Thanks, Curvy. See you at 5.